Good morning, good afternoon, everyone. Give me 1 second, just getting this live going. We should be live.
Morning, Niko.
Good morning.
Yeah, you sound good.
Sound good? Okay, good.
Well, everything's rolling.
All right, good. That's good. That's good. Let me get over here, move this over here, move that over there. Second. We got the
Amen.
15 and 21 day. Okay. All right, guys, let's get to it.
Rock and roll.
All right, we have a couple little announcements here. On the weekly index, we have the 50-day and the 21-day moving average. Let me find them. We got the 50-day right here. Let me get rid of some of this other stuff. I'm gonna drawings for a second. Let me add the 21-day. All right, guys. We got a 50-day moving average, a 21-day moving average just right here. This cross, not good, just so you know. Now we can look at every time it's happened in the past. I've already showed you the super guppy. I've showed you the Gaussian channel. I've showed you the golden death cross indicators. This is the 21-day and the 50-day moving average. Very similar. I mean, they seem to cross when all those other things happen, but this is just one other indicator that when the green line crosses the red line to the downside, look at where we are. I mean, look how similar it is just to the last bull market, where we hit a double top. We probably hit a double top where we start to come down and we bounce. And we bounce. This was a, whoops, sorry, headlines there. This was a, let me get rid of all the craziness here. This right here was a big drop. That was a 55% drop before we bounced up to 68K. And then this drop here from the top to this bounce area was about 46K. I mean, 46%. What am I talking about? 46%, and then it bounced, and it did get up to the red line and the green line. It literally bounced right up to where it was crossing. And this is why I've been saying that we could get that bounce back up to the 100 to 105 range, because that would bring us very, very similarly to the left side over here, somewhere up in this range. And that could happen rather quickly. We got Trump talking. We got all kinds of things happening in the world that could cause this to happen, where we have a huge surge and everybody gets bullish again. Everybody freaks out. Oh my God, this is it. We're going to the moon. And it just is it could, and I'm not saying this is going to happen. I'm just saying this is historically what has happened when these indicators are flashing this. So in my post, obviously I said that there was a major cross. This is just in addition to everything else I've been showing you with the super guppy obviously turning gray right here before the cross. Now that's an indicator in and of itself, turning gray. Every time it does turn gray, it usually is the beginning of the end. But when the 21-day moving average crossed right here, that was weeks after it turned gray, and that was after this big pump up. Boom, right on the cross. Now it looks like, I mean, we have the cross and we did have a pump up, guys. I don't know if you remember, but let's just zoom in. We had this big pump right here, all the way up to 98K, right when these two were about to cross. Now, there have been times I can go back and just show you most of the time when the green line crosses the red line on the moving averages there. And we're talking about the 50-day moving average crossing. We're talking about the 21-day moving average crossing the 50-day. And let's just go back and look at the times when it comes really close to it. Boom, and bounces. But when it crosses and the super guppy turns gray, or the super guppy turns gray and it crosses, that's usually the beginning of a downtrend. Now, again, I gotta be clear when I say that this time could be different, because there's a lot of crazy stuff going on in the world. But here, the super guppy turned gray and it crossed, and we already had the big dump, right? You know, the super guppy was turning gray right when we were at the bottom. But generally speaking, it's an indicator of what's to come. And now, is it possible that crossed right at the bottom? In other words, it's crossing here. Is this the bottom? Was this the bottom? Right when the super guppy turned gray, right there, boom, was that the bottom? And now we're going to work our way up. That is yet to be seen, but we have a couple things to discuss today that, I mean, it's one of those situations where if this, then that. We still have to wait to see if we can get above a certain area to know if we're going to go higher, or below a certain area to know if this is over and we're going to go lower. But here's one of the major indicators down here. We got the RSI. We are still below the floor. We did come above it right here, and we got above the moving average. As you can see right there, we got above it, and we got above the floor on that big pump up to 98, right where the cross happened. But then we came back below, not only the floor, but below the moving average. Now it looks like we're coming back. We're trying to get back above it, the moving average now. And it certainly is possible. We have a green candle here. We did bounce on this line so far. This upward trend could just be moved. It might not be in the right spot, but we could still be in this little bit of a upward trending wedge here. But this, again, you know, this, in order for us to have a super cycle, in order for us to have a new all-time high, in order for us to get up here to the 130, 140, 150 range, this, first of all, has to get above the floor. And it has to get above the downward trending resistance on the RSI, and it has to make a new high. I mean, we're not even close. It would have to get above this level. So this would have to go like this and get above this and get all the way up to here and literally get above this previous high. And if this started to pump up and get up here to the 199, 100K level, even above that and all the way up to the 105, 106 level, which would be equal to this left shoulder over here. I'm calling it a left shoulder because that's what it will be if this happens and it bounces here and it cannot go any further. But I will tell you, how do you know if it's going to go further if the price gets up to 100 or 105, how do you know if this isn't the time that it's going to, and you'll know down here. This is how you'll know. If the price gets up to 100 or 125 and the RSI is only here, then that's probably going to bounce. It's probably not going to go up any higher. The RSI has to break out and literally invalidate the bearish divergence. What we have here is bearish divergence going all the way back to March of 2024, when we broke previous all-time high and we got to 73.8 right here. That was when the Bitcoin ETFs all got approved, and 280 days of just consolidation and a giant bull flag before breaking out to new all-time highs. And that was the highest that we got on the RSI. Ever since then, we've made higher highs, higher highs, higher highs, higher highs, higher highs, lower highs, lower highs, lower highs, lower highs, lower highs. So far, all of these higher highs in the price made lower highs in the RSI. That's bearish divergence. Happened in the last bull market as well. We had a super high right here, overbought territory right here on the RSI, and that was right here at 41K, coming up from the previous bear market bottom. We had huge, look at that, huge pump up. I mean, we went from $3,500, guys. We went from down here, 35, 3,800, all the way up to 65, or actually we went up first to 48K or 42K right here. And that was from this bottom all the way up to here. And then we did consolidate. We dropped quite a bit. I mean, this was a huge pullback right here from 42K all the way down to right there, 30% drop to the bottom of that wick right there, 31%. And then we pumped from there all the way up to 58K, 61K, 64.7. But look at the RSI. Boom, 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 lower, lower, low on each one of those consecutive higher highs. So that was the first. So it started here, went higher, higher, higher. And then we had this big drop all the way down to the floor that we're trying to get above now. And that was all the way down back to 31K. Bounced, dropped, came all the way back up to 68, made a new high. I mean, we did get higher, but the reason why this is not even considered the high is because we didn't hold above it. We got equal to the 64.8 right here. We wicked above it to 68 and tried again. And not one of these held above this level. So that was it. That was the beginning of the bear market, and we dropped all the way down. But as you can see, when we came up to that 68K, that was the only other time that we got up to this line, and it still was not a higher high, even though the price went higher. So I guess what I'm trying to tell you is that this has to break the bearish divergence in order for the price to get higher and hold. So right now it's below the floor still.
What actually determines the RSI? Because I mean, it's like it isn't the price itself, because the price goes higher, but yet the RSI isn't high. What's bad?
Yeah. Hold on a second. I like to we do have all the definitions and all the explanations in our group, but I like to
I just posted it.
Yeah, I like to pull it up so that you can hear the actual creators indicators explanation as to what it actually is telling you, because it's one of the only indicators. It's not the only indicator, obviously, that people use, but it's one of the main ones that the experts use. The people that really pay attention to everything. The RSI is one of the most important. It's the relative strength index. But hold on a second. It signals potential entrance and exit points for long and short positions when it crosses the value threshold for overbought and oversold conditions. So I'll go back to it in a second. I'll just explain it as I'm reading it. But overbought, so this grayed out area down here from the 30 up to the 70, this grayed out area, when we're underneath it, it's oversold. When we're above it, we're in overbought territory. That is usually when you see this starting to get green, and this is on TradingView. On Phemex, it doesn't turn green; it just gets above this line. But when you see this starting to get green, this is overbought territory. Anything over this line, and overbought usually doesn't end well. Overbought usually is where people take profits. And when I talk to people, I'm not talking about retail traders like you and I. We're talking about institutional, big money pulling their profits off the table. And that's when we see boom, 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 boom. Look at this. As soon as we got over this, was right about here on the price. And we just kept going, kept going, kept going. And this is where the retail people like us, we call it the dumb money. Don't take it personally, but these are the people that get excited and they say, oh shit, it's really going to the moon. We better get in. And this is when they start buying. The people that we've been telling to buy since Bitcoin was down here, we're preaching to the choir, preaching to the masses. Get in now. We're at the bottom. No one wants to get in at the bottom because it could go lower. And they're like, oh, I'm going to wait for it to go down to 1,000 before I buy. And then it gets all the way up to here. And then there's shit, man, I should have bought. I should have bought. I should have bought. And then it just keeps going into overbought territory. Right. And that's when the masses finally can't handle the FOMO anymore. And they start buying right here. And then boom, that extra retail push gets it way up here. And that's when the big players take their profits off the table and boom, drops back down. All the people that bought up here get either liquidated or pissed off and think that the government and the powers that be are against them because they just lost $1,000. They have no idea that billions just got taken off the table right here. They're just playing a game against people that might be a little smarter and know what they're doing. And it's because they're understanding this overbought territory. The greed factor right here was off the chart. It was at 100. And so when the greed factor gets really, really high, that's when you need to pull your chips off the table. You know, songs have been written about it. You got to know when to fold them, know when to hold them, know when to walk away, know when to run. And just like with silver and just like with gold, guys, when gold hits $5,000 and silver pumps up to $100, everybody's running to buy silver, thinking, oh my God, did you see what's going on with silver? Silver's going to the moon. I was calling my silver broker to ask if they're buying because, and I don't know if any of you know this, but they are not. You know why? Because the melters and the smelters put a pause on it. On buying. Why? Because they're not buying at the tops. They know what's coming. And they will buy, but they'll buy at a 30% discount when they used to buy at 1% below spot. I mean, like at any given day throughout the last couple of years, if you had silver and you wanted to take it to a silver dealer or anybody, they would buy it from you like 1% below spot because they got to make some money, right? So if it was $40 an ounce, they would give you $38 an ounce, $39 an ounce, something like that. And they would never pay exactly what it's worth. They got to make some money. They got to hold it for a while and wait for appreciation. But when it does this and it gets to overbought territory, they will not buy it from you for $112. Silver might be worth $112, but no one's going to buy it from you for that amount unless they don't know what they're doing. Unless it's your neighbor who just decides he wants silver and you got some and say, hey, you want to buy my silver? Well, let's look online and see what it's worth. It's worth $112. So here it is. If you want to buy it, I'll give it to you for $110. They'll be happy to buy it for you a couple dollars less than the current value. But unfortunately, guys, I will bet you, I mean, I could be wrong, but I will bet you silver's not going to 200 or 300 or 500 anytime soon. What's going to happen is it's going to drop back down. Now, it could go up a little bit more. Certainly, it could go to 120. I mean, it really could because there's a lot of crazy shit going on in the world. And, you know, depending on what's going on in the world, it could go up a little bit more. But what happens is that as soon as we get into overbought territory, no matter what the asset is, silver, Bitcoin, whatever, gold, they're usually, I don't know if you guys remember when silver was $10, $12, $13 an ounce and it pumped up to 40 and then it dropped all the way back down to $10, $12, $13. This has happened before. It happens a lot. So this right here is the RSI. Let me go back to the explanation. Is telling you when we are in overbought territory, and you should pay attention to it because generally speaking, the smart money, and again, I say that with all due respect, it has nothing to do with whether you're dumb or smart. It has to do with the people that really know what's going on compared to the people that are not quite sure and are just buying out of emotion. Midpoint value crosses can indicate whether there is a bullish or bearish bias in a trend, identify periods of consolidation, and can be considered as a potential indicator for a trend reversal. Once we get up above this line, an indicator for trend reversal. And if you look at the history, If you just look at the history, just look, I mean, look at it down here. Have you ever seen it get above this line and just keep going and stay? No, it drops back down always. Now, currently, we are not even close to up here. We are way down here. We're down below the floor. That's not bullish. And so usually what that indicates, and you can look at the last time we were above this line was back here at 108. The price did get a little higher, but down here it got a little lower, a little lower, a little lower. And people are taking profits up here, and there's not enough buying pressure to get the price to move up. And then we drop 33%. So right now, let me just see if this is right here. Let me move this to the top and pull it down to where we went to. We dropped, did we drop that much already? Hold on. I might have this backwards. $126. We dropped down to 80,500. So far, the lowest right there. 36% we've dropped since we were at the top. And we did bounce. And we are bouncing right now. We are holding above here in a giant bear flag pattern up against support. If we break that, guys, if we break that support back down into the 80s, I would say below 80, 84, probably. Then we're probably going to come down to the 74. We're probably going to come down to this previous high. And it's not my opinion. It's just what happens when major support levels are broken and the RSI is not making higher highs. And if it's staying down here in the dumps and down here by the floor, then this is what we have to look forward to, in my opinion. And by the way, everything I'm telling you is technical analysis. It has nothing to do with the things that could happen if the government does this, or if the laws change, or a bomb drops somewhere, or Trump kidnaps another president of a country. I mean, those are things that we have no control of, which does cause chaos and fear in the market, right? But this is just technical analysis, and last time we were looking exactly like we are right now at the same time in the bull market. This is another key thing that I'm trying to get across, is that this isn't like happening in some weird time. This is happening at the exact same time. Right down here, look at this. If I put my mouse right here when we hit this bottom, if you look at the date down below, it's January 24th of 2022. Right here was December 31st, right here, December 31st. Of 2022. That was technically the end of the 12-month candle on the 12-month time frame. Let me just show you what that looked like back then. That was this candle right here. Boom. And that was the top. And it came all the way down before January started, and that was the beginning of the bear market. So again, only if you're looking at technicals and you believe that history repeats itself, and you believe that the charts don't lie, and you believe that these indicators do what they do for a reason, then most of the indicators, the super guppy, the golden death cross, the SMA 50-day moving average and the 21-day moving average crossing, the Gaussian channel turning red, and we're underneath it. If you look at all of these indicators that have been historically accurate, not some of the times, but all of the time, then this is bearish, right? Now, there is one indicator that has been accurate all of the time as well, which is the pi cycle indicator. And the pi cycle is nowhere near crossing. And normally it signals a top in the market. And the last time it crossed was at 65K in the last bull market. So right now, it's not even close to crossing. So that's an anomaly. That's something that has never happened. So when you have something that is very accurate all the time, that is not doing, now if the pi cycle was showing a top right here, and we had that cross, and all of these other things were in play, I'd be short with a lot of money for the rest of the year, probably. But the pi cycle cross, which is always accurate, I mean, has been so far, we're not even close to crossing, which could indicate that the top is not in. which is possible, of course, but it doesn't necessarily mean that the top has to be in before a bottom is in. So what do I mean by that? I mean, we could go lower before we go higher is what I mean. So, I mean, we certainly could pump up to 130, 140, 150, 160, but is it going to do it soon? Is it going to do it in the next couple of weeks? Or is it going to, be in August after we come down to 70 and bounce? I don't know. Those are the crystal ball questions. So, in order for me to think we're coming to 70, we would have to, break this very obvious resistance, very obvious giant M, possible possible head and shoulders that might be forming right now. And it would look like this, right to this level right here, very similar to that. And then we would have a possible drop from the top to that level right there, down from this level here. That would be down in the 58K range. And that would probably just be the beginning of it, because that would cause a lot of fear and panic, and a lot of people would be selling or be liquidated. And what happens, guys, is that whenever you have a lot of longs, it's a domino effect in liquidation. So whenever you see those news stories that $200 billion or $150 million liquidated from the markets, that is a bunch of things happening. First of all, someone with a couple $1 million long position gets liquidated. And then when that person gets liquidated, the price drops drastically and liquidates someone else with a big position. And then when that person gets liquidated, the price drops. It's a domino effect down until all stop losses or liquidations have been liquidated. And so the way to avoid getting liquidated is have a stop loss, right? But stop loss is still getting hit on the way down and taking you out of your positions. It's not even you that is causing the big jump down. Or even a 10,000 of you. It's the big players that have huge positions that get liquidated. And there are big players that are in long positions gambling, expecting a big move to the upside, and maybe don't even know what they're doing. And institutions generally know, but there are whales out there that are retail traders just like us that just have a shitload of money on these trades. Recently, I think Andrew Tate got liquidated for a few $1 million, and he's small fry compared to some of these other guys. We've seen some 20, 30 million, $40 million positions liquidated just over the last, 6 months or so. So now we don't know how much leverage. I personally don't know how much leverage that person was using, because you could literally have $40 million worth of Bitcoin. And if you're at 100x leverage, let's just do the math. $40 million worth of Bitcoin divided by 100, then you're really only risking 400,000 of your own money. But that's still, that's big. It's a big loss. But now, how can this be prevented from happening? Well, we need buying pressure. We need some kind of catalyst to cause not only the markets to shift, but billions of dollars to come in. And it's not going to be from us. It's not going to be from the retail traders that are sitting there waiting for something to happen. They're not the ones that are all calling each other and say, hey, let's all just buy together. And that's possible because they did that. They did that with GameStop. If you guys remember, a bunch of people got together in a Reddit post, and they all said, let's all buy and let's all put a short squeeze on these big companies and screw them. And everybody did it. And the market went crazy on a stock that no one would normally be buying. Right. And then what happened? Well, platforms like Robinhood paused trading. They wouldn't let you close your position, even though you were hugely in profit. They wouldn't let you close it or take the money. They paused it. They got sued for that. That's why I don't recommend trading on those platforms. And a lot of people got rich. Don't get me wrong, but huge institutions lost billions on that. You guys remember that. Kind of crazy time. But that could happen if enough people got together and did something like that, right? It's just like if everybody in the country got together and stormed DC, they wouldn't have the power to control anything. Of course, Biden said, yeah, boy, you can come, millions of people can come with your guns, but we got fighter jets. You know, basically threatening the American people that the government would still win that war. But if everybody just said screw the IRS and stop filing their taxes, it would be over. The IRS would go away. They couldn't do anything about it. So, but people are scared. So, and most people that retail traders are not trading that way. They're trading on what the market is doing. They're looking at, even if they're looking at charts like this, most of them don't understand all these indicators, but most of them are just looking for green candles, red candles. Oh, it's going up, I'm going long. Oh, it's going down, I'm going short. And they're not really understanding all of this stuff. The people who make the biggest money get out when they see the signs. What are the signs? This upward trending support. When we broke that up here back in November, the big players realized that this top is in for now. Now, it could come back up, but for now, they're pulling their chips off the table because this is scary, this big drop down, right? We went from 110K all the way down to 80,500. And then they wait and see. Is it going to hold and climb back up? Or is it going to drop further? And they just wait, because if you can make a few $1,000,000 from here, down here, up to here, and then you just get out of the market and wait, knowing what the average cycles are, then how many times a year do you actually need to trade? Once or twice? From the bottom to the top and from the top to the bottom. Or we can just wait for the next bull market cycle, the next bear market bottom, and go long again. But when the market makers and the people feel that the bottom is in, wherever it is, then they will all pile back in again, and that will push the market back up. But I don't think it's in now. In fact, I would say that we could be looking at another 20% at least to the downside. Right here is 20%, and that's about 68K, which is the previous all-time high. And if you add that to the already 30% drop that happened, that's only a 46% drop. And that would be half of what the average bear market drop is still. That would still only be half. So I'm being conservative to say that the bottom would be 70K. If it were to fall through all that. So now I'm not trying to scare anybody or paint doom and gloom. Some people say Niko's doom and gloom. Niko thinks the bear market's in. Chad doesn't think it is. It's not that we don't think. It's not that we're not thinking that it is or isn't. We're looking at indicators, and we're looking at fundamentals, and we're looking at other things happening. I was just long the other day. I'm totally optimistic we can get a pump up to 100, 105K. I'm a little skeptical that we get back above 126 in the short term in January, but I will certainly change my tune. If the thing about me, guys, is I base my opinions and my decisions on new information. I don't believe something and just stick to that belief no matter what. No. If I don't believe in aliens and then an alien lands on my front yard, I will now believe in aliens. It's that simple. You know, until something changes my opinion, I stick to an opinion. But if things change, I'm going to reevaluate my belief, and I will change my belief accordingly. But as of right now, all I have to go by is the charts, technical analysis. And right now, all of the major indicators that the pros use, and I'm talking about hedge funds and traders that make millions of dollars, are all just flashing this bearish signal. And it's a little concerning, but at the same time, there is one major one that's still not even close to flashing, and that is the pi cycle indicators. You can see the last time we had a cross was here. And that wasn't even the highest price that the market went. It was at 64.8. We dropped all the way down to 30, came all the way back up to 68. But the top was in here. This is why they call this one the top. This was the bull market top. This is just a double top before the big drop. But if we go back further, that was the top. And we go back further, that was the top right where it crossed. And if we go back further, that was the top. So when the pi cycle crosses, that's usually an indication of the top. The top is in. But this time, in this bull market, it's not even close to crossing. Here's the green line. And the red line is this one right here, still coming up. Oh no, it's this red line right here. Let me just change the color of it. And they're not even close to crossing, guys. Not even close, which usually indicates that the top is not in. And that could very well be. In fact, in order for this red line right here to get close to this green line has to come down, this red line has to go up, and that could take months. And that's why I'm saying the cycles might have changed. The bull and bear market cycles might be changing, but that doesn't mean that we're not going down first. But how far is the question? Is it going to be a typical bear market? Because these other ones dropped 80%, 70% respectively. But this time it could be different. This time we could only drop maybe 30, 40%, maybe 50 down to previous high here at 73.8 or 70K, and then bounce and then have a super cycle up to 200 and then the pi cycle crosses finally. I don't know. That's yet to be seen because this has never happened like this before. So I can only go by what I'm seeing on the chart. But if I, obviously we're looking at all these different indicators. So if I get rid of that, I get rid of the super guppy, I get rid of the, and we're just looking at the 50-day and the 21-day moving average. This is a serious indication right here on the weekly time frame that it crossed. It didn't just hit it and bounce. It's crossing. And we did have a wick up to it right before the cross, which is typical. Let's go back to the last time it crossed. Right when it's about to cross, boom, we have a big wick up to it. As soon as it crosses, it didn't hold above it, and that was it, the beginning of the drop. The last time before that, green line come down, it crossed, and we had a big pump up. We literally went above the green line here and tested that red line before dropping into a bear market. The one before that, green line crossed. We dropped way down here, and then we did wick up to the green line, but that was it, and that was still the beginning of the bear market. So again, it's not me being, pessimistic or anything like that. I'm just showing you what these indicators mean and what they're telling us right now. And
which indicator is that, Niko?
This is the 50-day moving average and the 21-day moving average. SMA, if you want to look it up or pull it up on your chart, it's the simple moving average. You want to, and then when you pull it up, it's going to be defaulted to the 9-day. So what you do is when you add it, you go over here and you click on this little tool right here, and then you change it, the inputs to 21-day, and then you change the other one to the 50-day on the link.
Thank you.
You're welcome. Now, obviously, as you can see, when we hit a bear market bottom and the green line crosses back over the red line to the upside, it's the beginning of the bull market. So same with the death cross and the golden cross. Let me put those on. Let me get rid of the moving averages for a second, just so you can see. We got what did I just put? Golden death cross. And then we go to the daily on this. Back in the last bull market top, green line crossed the red line to the downside. We hit down here. This would be equivalent to us hitting 80 and coming back up and retesting. Green line crossed the red line. We dumped all the way down to 80 and we're coming back up. We did get above the green line, but we did not get up to the red line. And now we're kind of having a hard time holding around that green line right now. Very similar to over here. We got above it, and then that was it. And this is the death. So when the green line crosses the red line, that's the death cross. When the green line crosses back over the red line, that's the golden cross. And that's an indication that we're pumping back up. So if this green line comes back up and crosses back over this red line to the upside, then this gets invalidated. I mean, it's like, yeah, it happened, but something else changed. Okay, so that's just one other indicator. That's the golden cross. Now we look at other things like Gaussian channel on the 5-day. Not only did we get below it, okay, so when we're in a bear market, it turns red. We get below. Here's the last bull market here. We come to the center line, we break below and touch the bottom line. We retest the center line, can't get back above it. It turns red. That's the beginning of a bear market. We're in a bull market top here back in 2017. We wick down to the Gaussian channel. We bounce. We come to the center line. We bounce. We can't get out of it. We hit the top. We come down to the bottom of it. We bounce and hit the center line again. Turns red. Beginning of a bear market. So right now, and that's the same for the previous one after that. But right now, we bounced on it, bounced on it, bounced on it, and we kept getting out of it, kept getting out of it. Gaussian channels like quicksand. Bull market, the whole time in the bull market, we hit it, hit it, hit it. This time we came down to the center line, fell through to the bottom line, went below the bottom line and retested, 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 retested underneath. We didn't even wick up to the center line. I'm still expecting us to wick up to the center line and then it turned red. Not good. Usually when it turns red. And by the way, that's on the 5-day. I go to the weekly on the Gaussian channel. We are below the center line and we've retested, retested, retested on the center line. And it hasn't turned red yet, but the 5-day is kind of an indication of what's about to come. So, but most accurate on the 5-day for the Gaussian channel. So let me get rid of that and let's go down to Super Guppy. I think I already discussed this. I'm only showing you this again, guys, so you understand what the correlation is here between these different indicators. Is that in the last bull market here, is the green, when the green turns gray and we can't get back above it, it's usually the beginning of an end. If we can't hold above it, beginning of the end. Back here, bull market top, green turns gray, bear market. And right now, the green has turned gray and we are below it. And we did wick up and come right back down. Very similar to this one. We wicked up. Very similar to this one. We wicked up. Now, it hasn't turned purple or red yet. Oh, wait. Oh, shit. What do I see? Is that purple coming in? It's not good. You see, when the purple starts coming in, guys, we could have a huge fall off. Now, what's about to happen today and this week? What's going on in the news? Anybody want to?
Interest rates. Mortgage interest rates.
We got mortgage interest rates. What else is going to be announced? We got the Clarity Act, supposedly going to get finalized towards the end of the month, starting today, I think, or yesterday. We got possible infrastructure changing. We got people getting fired. We got all the chaos around the world with ICE and all this crazy stuff happening. I mean, we got silver at all-time highs, gold at all-time highs. What does that normally indicate? Weak dollar crash. Let's look at, anybody want to see the, go ahead, sorry.
Earnings reports.
Earnings reports. Let's look at the dollar. US dollar index. Oh, hold on, wrong one. Man, I can never remember how to find it. There we go. Dollars weak, dude, we just dropped from $1 down to 95 cents. I mean, 100 down to 95. So this is the dollar is dumping. The dollar's the USD index is going down.
You know, something that's interesting in that is if you go back and look at November of 24, before and after, it kind of tells a tale. November of 24.
Right here. On the
Yeah,
dollar.
where it was going down, going into the elections. And then as soon as November hit, it just shot right up.
Yeah, going into October.
But then since, you know, what would you say, March of last year, it really started taking a plunge.
Yeah.
When the dollar goes down, the European stock market explodes. You lose money here, you gain money there. Depends on your attitude and what you got. And the Fed chairman is basically under indictment. He's given a press conference today, so it's all kind of interesting.
Yeah, this is just crazy week, guys. This is just like this is almost time. I would say that it's probably better and safer to not be in the market over the next couple of days. But you know, the problem with that is that you won't catch the big crazy move, but you don't know which way it's going to go when there's all kinds of chaos, and you really don't know what the announcements are going to be, and whether they're going to favor or not. I would say now. Anybody got the NASDAQ or the S&P 500 charts in front of them? Let me see if I can pull that up. Stocks. Go to
SPY barely put in a new all-time high, ever so slightly.
really. Thing, USDT.
QQQ is headed for a new all-time high. It was today's high of the day. Was right on the same pip as the previous all-time high at 636.5.
What is the symbol for that one? What are you pulling up there?
What'd you say?
What are you
SPY, isn't it?
SPY on what? On the on stocks or indices?
I never look at it, to be honest. Chad, I would know.
Indices.
Yeah, that's what I thought. Okay.
Everything's flat, flat, flat till the Fed speaks in what, an hour, 20 minutes?
Yeah. Man, that was a big bump. I don't know, guys. It's a little sketchy right now. Everything is like fucking contradicting. But what is the S&P at right now? I'm a little concerned. I'm a little concerned that it could get worse before it gets better, is all I'm saying. It could get better before it gets worse too. I mean, it could do that. I'm just showing you the indicators that are all flashing this very bearish symbol right here. For crypto. Now, as far as the stock market goes, it usually crashes first. And usually deeper than the crypto market. So like if the stock market, if the S&P drops, 50%, then Bitcoin will drop 15 to 20%. But we've kind of been doing that right here, guys. Just going into November, going into the end of the year, we've dropped drastically. And so now we are kind of holding. We are trying to come up a little bit. But if you look at this, if you just, I already have these lines drawn. Let me just get rid of some of this craziness. So, with my analysis here, guys, all I'm trying to do is make sense of it all by showing you all the different, all the different boxes that need to be checked off to make a decision. And it's still kind of uncertain because some of the most ones that are well respected are still not close to showing a top, but all the other ones that are well respected are showing that we flipped to bearish already. So it's kind of a strange time. And then you got the president, you got something that has never, this is why this time could be different. You got something that's happening that has never happened before. You got governments around the world. I know I say this a lot, but you got governments around the world. You got states, individual states going on a Bitcoin reserve. We got a president of the United States promising to buy 1 million Bitcoins over the next 5 years. We got Bitcoin reserves. We got the president and his whole family into crypto, making billions of dollars a year. His 2 sons have one of the largest mining facilities that mines 2% of the entire Bitcoin production. Trump's 2 eldest sons, their mining facility mines 2% of the entire Bitcoin market. That's huge. And then you got XRP, Ripple. You got all the contracts with all the banks. You got all these digital currency exchanges that are all going to switch over. Possibly the entire economic infrastructure is going to be switching over to blockchain technology and crypto settlements on the back end. And that is the main thing that could make this time different. I mean, this time could certainly be different. But what I would still say is that in order for us to see that big move to the upside, we need this needs to get above the floor. I mean, we're still down here below the floor on the RSI on the weekly. This is a very well respected and trusted indicator here. And the bearish divergence has been just ongoing. And if this pumps up to the top of this downward trending line right here, we could see a big pump on the price. But is it going to make a new high? That's the question. Is it really going to get above the 126 to 130, 140? And I would say it could do that. And this could still not get above this. But so if we do get above 126, 130, 135, and even if it's just a slightly higher high, like it has been doing. I mean, let's just look at it. We had 108, 109, 112, 123, 124, 126, slightly higher every time. So let's just touch all those. And even if we got up here to like 130, 136 in the short term, that'd be great. But if this doesn't get above this, when that happens, it's just more bearish divergence, which means we're going to come down even further on the next drop. And that could be it. That could be when the pi cycle top crosses, or the pi cycle actually has a cross. That could be, but I can't predict it because that's crystal ball stuff. And I don't know. All I can do is look at what's historically been happening. But this right here, the super guppy turning gray, and now actually starting to turn purple. If you really look at it, the EMA ribbon, the 50-day EMA, and the 21-day EMA. Let me turn off Super Guppy. This is the most recent cross right here, guys. That just happened. That just happened like 2 days ago. I mean, it was just touching and it just crossed. That's not good in the short term. We did bounce here on that cross. You can see right here. I mean, we did wick up to it right when it was about to cross, and we did come all the way back down. And we are still holding support here on this line, which is good. And that could mean something. But if we look at the last bull market, that's this line right here. We held and we bounced up to the cross. Let me get rid of some of this other stuff. We did bounce up to the cross, and that was the beginning of the end. We couldn't hold it. And that was probably the right shoulder of the big head and shoulder. It just didn't come up that high. It would have been nice if it came up that high, but it didn't. And so over here, do we have a big head and shoulders happening? It hasn't. I mean, we have a left side and possibly a head, but this side right here, we could get up to the 100 to 105. It would just be equal to this side over here. That would be a big rally right now after this cross. But look what happens when we do that. Look what happened last time. We broke both. We crossed the red line and the green line, and we wicked above it, but we didn't hold. So we would need to see that, and it would need to hold. And if I go back and look at all the other times, I mean, it's the same, guys. Let me get rid of all these lines so you can see. Right here, 21 AMA and the 50-day EMA cross. We wicked back above it, the green line, and we touched the red line, but still beginning of the end. Back here, cross, we wicked up to the green line, still beginning of the end. And so, if again, I say this repeatedly, if we're just going by indicators, this could be the top, but we would see. I mean, there's a lot of very smart people out there, and I only follow a few of them that think that another 20% to the downside might be all there is, and that would be it. This would be a much shorter bear market. The bottom could be in. We could be very close to it. This might have been it, 80, but to say that we won't double bottom there or even come down a little lower to the 70, you know, this range. Oops, let me just get rid of all this shit, right? We couldn't come back down to this previous major resistance and support area. That's at the 74K. That would just be another 20% down. Again, I'm not saying that's going to happen, but yeah, right there, about 20%. Actually, 20% would be exactly the previous all-time high. If I take that line right there, that would be exactly pretty much right over here at the 68K. So I would say between 68 and 74. And if it holds above that, then we're still in bull market. We still have a run. We still have a potential to make a new high. But as I was saying over the last couple of months, that if we get below 70, then, you know, we could see one of these bigger drops. That would be like this. That would be like this, getting below this level right here, where we went all the way to 64, came down to 30, bounced, went up to 68, came down to 30, bounced, made that run for it right when that cross happened, came back down, went through it and retested right there. That would be like us going through the 70, back up and retesting it, and that would be the beginning of the end. That's what would have to happen for me to think that the bear market is for sure in. Right now, it's not for sure. Right now, we're still in upward trending, technically. We do have a higher low still, technically, which is all good. And this is a big bear flag, but it's up against an interesting support level right here. Upward trending, just like this side was. Interesting support, upward trending, big M, tried to run for it right where that cross happened, but it couldn't. So I'm just comparing it, guys. So don't, you know, this is not set in stone, obviously. I'm just showing you all the different possibilities here. And so that's how I trade anyway. I look at all the indicators and make a smart, I try to make an educated decision. But the problem is that we got so many of them flashing bearish and one that's been accurate every single time, showing a pi cycle top at the top, not even close. These two lines not even close to crossing. So that means that the top is not in, but when will it be? Could we go down first before coming back up? My answer to that is yes. Could we just go up? Yes, over time, but a catalyst would have to happen. Some major catalyst. And right now, this is the week for the catalyst, right? All the shit that's happening right now in Congress, the Clarity Act getting approved, interest rates coming down, Fed chair being fired, he's being indicted. There's so much going on, guys. So it's kind of a scary time to be in a position one way or the other, because you really don't know. Now, unless you're scalping, obviously giving signals and, making money on these little moves, ups and downs. But go back to let me go back. This is XRP on Phemex, and as you can see, we did bounce on this little upward trend that we have on the lower time frames. On the 15-minute, we came down to it, held and bounced, and it looks like we're trying to hold support above it right now. But we have the ceiling right here that we keep hitting. So we have a upward trending support and horizontal resistance coming into another apex right here. And yeah, I think we would need to get above that. That is an obvious breakout of a downward trending falling wedge on XRP. But if we zoom out, we are still in the overall downward trending channel, which is this big white grayed out area that I have. We're still in it. We're still in the middle of it, but we were bouncing on the center line. This blue dotted line right here, we're bouncing on it. Right at the breakout of this wedge. Right at the breakout of this wedge. Look at that. We're bouncing right on the center line. And that's positive. That's good. That's bullish. But if Bitcoin can pump up to 100 and carry XRP up with it, where will it go? Will it just come up to $2 for XRP? Will it come up to this white line at 211, 212, where Bitcoin gets to 100 or 105, and then we just continue in this downward trending channel? And the reason why I'm thinking that it's almost time for possible decoupling of XRP is because this has been the floor historically for XRP going back a year now. And if Bitcoin drops down to the 70, sure, we could see XRP correlate still. But if XRP does finally break out and gets used for something else other than a speculative asset class like Bitcoin, then we would have to decouple, and this could break away from Bitcoin. It is going to happen eventually. The question is when. And so, yeah, we all want it to happen now. We're bouncing on the floor. And again, if I zoom out on this, this has been the major floor for a while, over a year. And I'm optimistic, but at the same time, I'm realistic. Chad, if you got, I know you have a sometimes different viewpoint than me on the grand scheme of things, but if you want, you're welcome to jump out and give your take.
The one thing that stood out to me, if you go back to your screen with the, what was it? I think you had it on the golden cross. Because there's a handful of times people ask me about these indicators as well, and I just wanted to point something out. If you can take off everything but, I'm pretty sure it's the golden cross.
Yeah.
Yeah, these two.
This is the simple moving average, the 50-day and the 21-day right here, this cross right here.
So if you scale into, scroll down for me, your chart. No, it was the other one.
Let me
it was the other two EMAs that you had.
It might have been, oops.
I can't remember the size of them.
Might have been
but
the golden. I had that on was it the weekly or the monthly? I think it was the daily rather.
Yeah, I think it was the daily. Yeah, this one. Yeah, the one thing that stands out to me is in that bull run between, or the current market cycle we're in right now, from the bottom of 2023 till now, you had 3 false crosses.
Yeah, we did.
1, 2,
Right
3 false crosses that didn't really do anything. And if you go back, can you go back to 2017 or in pre 2021? We had
this right here. This cross was the COVID crash, and we did recover quickly.
Yeah. Yeah, this one I don't really. When you have that many false positives for something, this one I'm really not a fan of.
Yeah,
but
I worry about the golden cross and the death cross rather, because the death cross is when it crosses to the downside. The golden cross obviously is when it's crossing back up. We just haven't had a golden yet. So we had the death cross. If this is accurate, we had the death cross. Now, obviously, if we can get a golden cross, then that would be a false. That would be the same thing as what you're talking about here.
Yeah,
and I agree. I do agree that this one has had a few. And now back here, it was explainable because this was obviously COVID crash in 2020, and this was a bear market bottom after a bull market top. So we did cross here, death cross. We did come down quite a bit before we had a golden cross, and we did pump up. And then this was the anomaly, because most of the time we don't dump all the way back down like that. That was a big drop right there in COVID. So it's hard to say, but yeah, staying above it. And and that cross right here, here's another one. What you're talking about.
Yeah,
we hit the top here at 64 on the pi cycle. The pi cycle was saying this was the top. And we dropped down 56% to 30K, and we did cross. And this is like very similar to what we're looking at right now, where we have this cross, and we could come back up and have another run up. But would it be a new high? Would it be a parabolic move to the upside, or would it just be trying to get back up to previous high here? This was considered a double top. And then, again, we crossed again. But yeah, you're right. We did have 2 death crosses here on the daily. We had one here and one here. And we did recover from this one. first one.
Yeah. I find
I agree.
myself, I tend to be a lot more narrative driven than I suppose indicator in the sense of, I mean, the divergence on global liquidity against crypto right now has just grown to such an astronomical rate where it typically follows it pretty well.
Yeah.
But it's created so much disparity between the two. And Bill and I were talking on my call yesterday, and Bill shared a pretty funny story. He said someone was coming to my house to fix my dishwasher, and his little teenage apprentice who didn't know shit about shit was asking me about silver. And he's like, that's how you know that you're likely to see a rotation out of that right now. And so I think the rotation into it has really exacerbated out to the point where um, we could see that capital rotation back out and back into crypto. And
Yeah. I agree with that. And when it comes to silver and fine, heavy metals and things like that, I have a good friend who owns something called Bel Air Coins, which is in my area here. And this guy's been in the business for a long time. I mean, you go into his shop, you gotta go through 3 security windows. He's got armed guards inside there and everything. He's got huge bars of gold, and he's got a like 100-pound silver bar just sitting on the counter. You can't even steal it. You can't even lift it. So it's like, I asked him, I brought this in. There's a bag of silver. I brought it in just in case, just to see, like, if he tell me his honest opinion, is this the top? He goes, we'll buy it from you, but we're paying 30% below spot right now because the smelters, the people who melt the silver, because when these guys buy gold and silver, they don't sit on it. They have it melted into bars. Like if you're bringing them chains and gold jewelry and stuff, they don't keep that shit. They melt it. And so he told me something he hasn't seen in a long time. The smelters are not buying anymore. So he'll buy it, but he's going to pay 30% below spot. Whereas normally throughout any given year, throughout history, they will pay you 1%, 2% below spot. So if it's $40 an ounce, they'll give you 38 bucks an ounce. It's because they got to make a little money. But this time, he basically was telling me they're not even buying right now because they think it could be the top is in. Why are they going to buy it at $112? They're not going to. They're not stupid.
We see that in crypto all the time with the difference between spot and futures, and the market makers have to bring them back together. That's going to be a bad day for some people who got in late.
Yeah. And you see those memes, guys, where we show the picture of the meme where it's someone at a checkout counter and they're selling Bitcoin at $1,500 and there's nobody in line, but when it's 110,000, the line is really long. You know what I'm saying? And so same with silver. When silver gets to 80, 90, oh my God, do you see silver? We got to buy some. And everybody goes to try to buy silver at the top. And it's like, they don't realize that they're buying at the wrong time. You should have bought it when it was 13 to 20 or 30 or $40 an ounce. And, and you just wait for the next bull market top, but nothing just keeps going up forever. Nothing that I've ever seen. Real estate over time does, but is it because the real estate is getting more value, or is the value of the dollar just going down over time? What's the real reason? Because it doesn't cost more to build a house. The material should be cheaper over time with new technology. So it's just dollar value going down. And then, of course, money pumping into these asset classes as a hedge against inflation. So they're hedging. That's why the price is going up in silver and gold. They're hedging. And then when things stabilize again and they feel safe, they pull it out of there and put it back into other asset classes. It's just a hedge against inflation, but you don't really need to hedge if you don't have a lot of money. That's what billionaires and multimillionaires do. But if you're just trying to build wealth, buying gold and silver is not going to get you rich. It's fun to hold and look at, but especially at these prices. Even
if you want to go see some wicked divergence, some wicked bearish divergence, go to gold. It is.
Oh yeah, and then if you even look at gold versus
crazy.
BTC, yeah, I mean, it's at 5,300 today. Holy cow, that's a new all-time high right there. Every time we have one of these big pumps, though, %, 11%. That's not that much, but 12%. We're going to have a pullback here, guys. It's just a matter of, I could probably come back down to 47, 4,800, but now is not buying time. buying time was down here before when everything was consolidating and these, you know, they always say buy the dips, right? But most people don't. They wait for everybody to be talking about it. But you see this line right here. It's the golden death cross. Let me get off of that and go back to the moving averages. Man. Okay. They're both heading up still. So I wouldn't buy it, but I would hold it if you have it. That's me personally, but now we've seen this. I mean, with silver, when silver was $40 an ounce, when it pumped from $12, $13 an ounce up to 40, it dropped back down to 10, 12, and it was down for a long time, years. Now there might be other reasons why it'll keep going or why it might go up to, you know, $150, $200 an ounce, but we're talking about a dollar crash and we're talking about going back on the gold reserve. We're talking about going to Bitcoin. We're talking about a lot of fundamental stuff that could be happening that would cause that. And you guys know that there's probably people out there that have been preaching this for years. Gold is going to go to $10,000 an ounce. They've been saying that for 20 years, 30 years. And I'm not saying it won't get to $10,000 an ounce, but what will be the buying power of the dollar when that happens?
And Nico, it's not just the federal government. These cities, I deal with a couple cities, they do not pay their bills. Number one, I mean, you've seen it over the time. Even with, I'm in South Florida, property values are going through the roof. These cities and municipalities, they're not saving any of this money that they're bringing in property taxes and everything else. So when things do belly over, because I deal with some people in high-end real estate, and if they do what Trump's saying, where they're gonna some of these hedge funds that have so much single-family homes, and some of those more prices come on the market like anything else, properties are going to plummet, property values, and then property taxes will go down as well. And then these cities that, like we saw before, some of these cities started having, failures. They weren't able to pay their bills. So it's a ripple effect that there's a lot more coming than people expect. You need to like save some money and have emergency funds and do the things that we're doing, but most people aren't.
Yeah. Yeah, real estate's kind of a different animal altogether because then you look at supply and demand, you look at building all the buildings and apartments. It depends. People are leaving California and going to Texas and going to Oregon and surrounding states, but they're coming to Florida. So, Florida property values are different than other states. You go to Palm Beach, Miami, property values just continue to skyrocket. My brother, for instance, very much into this gold versus real estate versus dollar crash stuff. And he's hesitant to buy any real estate for 10 years now. And, and I'm like, yeah, but dude, if you just look at real estate going back 20 years, even when we had the market crash in 2007, 2008, the real estate market crash, it is up 100% more since then. So it's usually a temporary pullback. Even if you would have bought at the peak of the market in 2006 before the big crash, you'd still be up right now. If you would have held your real estate, you'd be up like 100%. So I used to have a chart on that. I can't find it anywhere. This is gold, Bitcoin versus gold right here. And I don't know where the Bitcoin or the gold is. Hold on a second here. Get this right, I think. Well, we are bouncing, we are holding support. We do have what could be called a big bear flag here, but we are bouncing on support with it. So, I think we still need to break above this support or below, one or the other. In the short term, though, in the short term, XRP is climbing a little bit. It's holding above its upward trending support, but it is coming up against resistance here at the $1.93 level. Yeah, I'm with you, Chad, on that one. As far as the death cross and the golden cross, as far as the EMAs, the moving average, the SMAs, and the Gaussian channel and the super guppy and some of these other things that have been pretty accurate all the way along. I mean, like I said before, there's like 5 boxes that need to be checked in order for me to be certain about something. And it seems like 3 of them, 3 or 4 are checked and maybe 1 or 2 are not. But the pi cycle indicator, way off. I mean, the top's not in on that. And then, so you look at all the indicators, guys, and then you take all the indicators away and you look at price action. Forget the indicators. Just look at price action. And then what? What are we looking at? Huh? We are still in a downward trending channel. Overall, this is XRP, the overall downward trending channel. In the middle of it, breaking out of a falling wedge inside the middle of a downward trending channel, right at the floor. So that's kind of bullish. I mean, that's good. But where can we pump to? Where will we pump to? And if we're still correlating with Bitcoin, then we got to go look at Bitcoin because it's the tide rising all boats, so to speak. And it's still, yes, upward trending. But I think we got a couple levels that we would need to get through. I think if we can get up above I think 100 would be the next resistance level, somewhere right in here at 100, because we had resistance, support, this big drop from the top, boom, hit it right there on the nose, bounced, hit it again here, bounced and fell through. That would be the next resistance level up above us. And I think that we will come up and hit that. But if we fall below this and we get below the 80 into the 70s, then that's another story. That's a different ball game altogether. Chad, if you want to take over for a second, I got to grab something real quick.
Okay.
Anybody still sitting? Erwin says he's still sitting in longs on XRP. I'm still sitting in my longs too. Got a nice little push.
Fill in your
Alright, so let me show
BC8.
you what I was looking at with I know we were talking about SPY and QQQ and gold. Let me share my screen with y'all. Silver has gotten to the point where place this. Silver straight up looks like a meme coin at this point. We were covering this last night just on how far out of sync it's gone. All right, so that's really, really extreme divergences right here where price is headed up, RSI is headed straight down. All right, and the reason why this is significant to me is, again, because we were kind of talking about just that capital rotation and the fact that silver is creating, I guess, really fine metals in general, right? Gold was first, silver's next, or silver was next, and it's already, priced that in, right? It tells me that people haven't really bowed out of the narrative of hysteria, right? We're kind of seeing that play out right now in fine metals, very similar to what we've seen in crypto in the past. And so definitely between that, looking at stablecoin dominance, falling back into its higher time frame channels. If we really zoom out here. Right. Obviously, when the market really fell to the lows, stablecoin dominance popped out of its overall channel. Now we're seeing it reject back down into it. If we see stablecoin dominance break 10%, that'd be very good for crypto prices, right? That mixed with seeing rejection on silver, gold, Bitcoin dominance is starting to really find its place in a, oh, how do you say it? In a make or break zone. Whereas if dominance follows through on the rejection here, right, we would see a pretty solid rotation into alts. If BTC dominance pops up into here, it's not that alts would necessarily not do well. They just wouldn't necessarily like decouple themselves. BTC rejecting off of this 60% range down, that's where you would see alts start to move into what is considered alt season. Right? If we pop above 60% and get back up to 61.5, it's not necessarily bad for the market per se, but you just wouldn't see that decoupling in that form and fashion. And then, of course, we can also go look at total 3. Total 3 on our daily time frame could very well be in that early stage of a W, where we're currently sitting on the right leg of total 3. So all the 3 of those things, like stablecoin dominance going down, BTC dominance going down, silver, gold putting in a top. Not saying that silver and gold necessarily crash, but they would at least revert back to their mean of their trend, which I can show you. Those are kind of the 3 factors that would lead to really, really parabolic moves in crypto, right? And that's really what I'm referring to when we talk about capital rotations. And at least in my opinion, since I've been looking at charts, I've really never seen gold and silver create more of a manic retail behavior where people who aren't even in markets, they're not even really like, they're just kind of average Joe Schmoes talking about silver and gold. This has gotten so wicked. Somebody asked to see my gold chart. Let's go to the 12-hour. And what I mean by reverting back to its mean, right?
Exactly.
What's that?
Reverting to the mean, you're saying, what would that look like for silver and gold?
Coming back to a more healthy trend, right? I don't think it's Larson who talks about the steepness of channels, right?
Yeah.
Really, really steep trend lines. They're not sustainable. Like price just can't go up like a rocket ship indefinitely, right? And so when we revert back to our mean, right, we tend to fall back to what would be considered a healthy trend. For gold, I wouldn't say, oh, gold's going to, 2K, right? That'd be a little ridiculous, right? I think reverting back to like the low 4K would be pretty healthy.
Hey, Chad.
Yep.
Speaking of mean
Can you get a little
conversion,
closer to your mic for me?
sorry,
Oh, you're good.
is this better?
Yep, much better.
Speaking of mean conversion, I like to think of it as approaching an average line, like a
Yeah.
moving average or an EMA, and a lot of times it can be shown over over time that a price will spend as much time below its mean as above it. That's why they call it the mean. So mean reversion is almost an axiom in any kind of charting.
What do you mean by axiom?
It's very predictable,
Mm.
just exactly like you said. But if you were to throw an average on there of some kind, it would be it would instead of just going back to the straight line, linear trend line, you could think of it as they're going to meet. The average is continuing up, and the price will probably continue down until it either meets the average line or the trend line.
Mm-hmm. Yeah.
There you go. Yeah. So it's also coming up to meet the price, is all I'm saying.
Right. Yeah, at this point,
But
I mean,
yeah,
it's
in this case, the trend line's also going up. So
right. And its prices pulled so far away, and that's only sustainable for so long. You know. And I mean, shit, dude, silver's even worse. I mean, this looks like a freaking, like I said, this looks like a meme coin on the daily chart, which is like,
It's an ICO.
you know what I mean? Like if you go back and look at any, healthy price action for silver, I suppose you had something similar to this back in 2011 when it came up to $50, reverted back down to healthy price action, right? So it's not, I wouldn't say that we haven't seen this behavior before. There's a little bit of an anomaly, but it can only sustain itself for so long. I mean, price can't just go up and up and up parabolically indefinitely. It has to revert back to at some point or another. And just the fact that this is starting to turn into, hysteria slash mania, right? This tells me that that type of in retail behavior isn't really out of the market yet, right? It's just not focused on crypto right now. And I think to a degree, we can blame to a degree October 10th, right? October 10th was a really, really bad day for a lot of people, right? And I just think that we're seeing capital rotation, that type of retail mania behavior hasn't came back to crypto ever since. And so, but it is appearing to be positioning elsewhere, right? However, it can only sustain for so long. And the thesis is once we start to revert back to healthy price behavior, right? Where does that type of retail mania sentiment start to position into next? Right? There's only so many options, right? So that's kind of the thesis on that sense. I mean, maybe they'll revert to pork bellies next.
could a fib retracement help in estimating or picking
Yeah, I
some levels?
certainly think it could. Yeah. I would probably just run it at if I were to throw fibs on this, I would run it off of my base here instead of, all-time lows down at $11. But it is pretty wild to think that silver has done 860% now over the last 2,000 days. Your 50 is $69. On my fibs, I usually like to run a back test box from the 50 to the 68 as a range. But this, I would not. I mean, people are FOMO. The thing is, right, the whole point of this is people are FOMOing into precious metals right now because of this.
Yeah, that's for sure. All right,
What you were
guys.
saying, what you were saying, Nico, about the silver smelters. I mean, that is 30% under spot. I mean, that is
Yeah.
like you were saying, like it's always been 1, 2, maybe 5 on a really greedy,
Yep.
shitty dealer, but 30 is astronomical.
And that's why I went. I went yesterday too, because
Yeah.
I trust these guys. And I'm like, okay, like if you're buying right now, I will sell my silver to you. If you're buying right under spot, I'll sell it to you. That means that, but when you're scared, when you're not buying, he said he would buy it, but it's going to be 30% under. And that's only because the smelters are not buying anymore right now. They're on pause right now to see what's happening because they don't even know what the fuck's going on. Excuse my language. They don't even understand it. So yeah, it's scary when the people that deal in that all the time are not buying.
Hey, Nico, why wouldn't you sell it at there? Because it's going to probably drop and correct 30% or more. You'd still be ahead of the game if you really wanted to sell it.
I don't really care to sell it, but I would have if they were paying $112 per ounce, because that's what it was yesterday.
Right.
I would have. But yeah, 30% drop back down. I think even if it drops 30%, it might hold there and continue to maybe go back up, or at least hold maybe. But I brought it just in case. But when he told me that, I was like, okay, there's some, because what that tells me is that there's fear in the market. If the government does something crazy and switches something over, or maybe if all the conspiracy theorists are correct. And when I say conspiracy theorist, I mean conspiracy factist, the people that usually write about the conspiracy. It's only conspiracy for, until it becomes a fact, right? Then it's no longer a conspiracy. And the crazy thing about conspiracy theories, guys, is the majority of them have come true. And so are they really conspiracy theories? Are they just facts that haven't been factualized yet? But if everything's true about what might be taking place behind the scenes with the finance, you saw what Trump did in Davos, and you saw what, I don't know if you guys watched that, but if you see what's really happening, he created a whole nother board, the Board of Peace or whatever it is. He created his own World Economic Forum, but with all the right people. He's basically telling everybody, screw off, we're going to do this, we're going to do something different here. And he basically told every country right to their face that if it wasn't for America, you'd all be speaking German. He basically said that to everybody at Davos. And it's crazy what's going on. But then, I mean, have you ever seen a president in history? I haven't. I've been through 11 of them in my lifetime. I've never seen one in the history getting basically crowned from royalty all over the world, giving Nobel Peace Prizes and giving literally crowns and jewels as gifts for what he's doing and stuff. It's the craziest thing, except for the global elitists. They don't like it. And of course, the ones that are trying to hold on to their power and their manipulation for as long as possible. I'm not saying he's the savior of the world, but he's definitely shaking things up. But the question is in what direction? He basically appointed himself the head of the board indefinitely, permanently. So even after his presidency is over, he's still going to be the head of something that any other president's going to have to answer to. That's the crazy part, right? So with all that being said, are we switching over to a digital currency? Are we switching over from the old system to the new system? And what's that going to do to the dollar? I know they want to save the dollar. The dollar's going to have to be backed by something. Is it going to be gold and silver? Is it going to be Bitcoin? Are we going to be transacting in US dollars? Yes. Is it going to be stable coins? Yes. Is it going to be digital currency? Yes. Is it going to be, in order for the transactions to take place, it's going to have to be a very quick and fast and a very efficient blockchain network. What is the one that's in play? What's the one that's contracted with over 11,000 banks? It's Ripple. Is that factual that that's going to happen? No, not necessarily, but it's pretty much in play. I mean, Brad Garlinghouse is on that board. Brad Garlinghouse was at Davos. Brad Garlinghouse is right up there with all of them. He's like in the works with everything. He's the CEO of Ripple. The treasury, the woman whose signature is on the $100 bills. You pull out any cash you have and look if it's recent and look at the name signed as the U.S. treasurer on any currency. She is on the board of Ripple. It's kind of crazy what's happening. So, you know, it's exciting if you catch it right. It's exciting if you're positioned properly. Most people don't even know what's going on, guys. 99% of the population just go about their day in a fog, go to work, watch TV. Some of them, not all of them. In fact, not even the majority of them, but a small percentage of them are still watching the misinformation networks. I can't even believe that people still watch The View, but apparently they still have an audience. And obviously there are people out there that believe all that stuff.
And Niko, their audience is dropping dramatically. What's her name? Gosh, I can't think of her name. Megyn Kelly. No, was talking about the numbers that just came in, and MSDNC and CNN. They barely get a million viewers during prime time, which is unheard of. So it's becoming less and less. They want us to think it's all this grandest, but they're losing, and they're losing bad, which is great.
Oh yeah, there's TikTokers that have more views on a daily basis than teenage TikTokers have more views on a daily basis than that entire national network. So it's kind of crazy, guys. And I'm sure you probably, if you were paying attention to the whole Davos thing, Governor of California, he was banned from Davos. They wouldn't even let him speak. They kicked him out on Trump's order, basically. Because Gavin Newsom is just talking shit against the administration, and he's like it's like going against America, basically, on a national stage. And you got exodus from California, mass exodus like never seen before in the history of the state. People are moving out of California. The U-Haul announced that people moving from the state of California is at an all-time high. And they tried to show where everybody was actually moving to. And it was Arizona, Texas, a lot of people to Florida if they could afford it. But Florida is getting out of control, expensive wise. Arizona, certain parts of Arizona, extremely expensive. But Texas, the surrounding states, they're just getting out of California. That's all there is to it.
It's a breakaway state.
What's that?
It's a breakaway state.
Breakaway. Yeah, it's crazy what's happening, guys. And New York too. New York is falling apart, and it's not necessarily Democrat Republican thing. It's just policy. It's common sense, guys. And I think people are starting to wake up to the common sense. There's a lot of Democrats that have common sense too, and they're starting to realize that Hollywood totally disconnected from reality. But anyway, with all that being said, I'm not trying to make this political, but when you take it all into consideration, gold, silver, the politics, the government, what Trump's doing, there's some shit about to happen, guys.
Oh, I was going to tell you that. I was like, since all the wealthy and the rich are buying that gold, and silver and copper, they're just basically protecting their assets, and they know that the Great Reset on however it's going to happen is going to happen, and they're also putting their money into the crypto. So when the new reset hits. Again, we don't know how it's going to get there. We don't know if it's going to be through civil war. We don't know if it's going to be through another outbreak or something. We don't know. But something's coming. What you just said, something's coming.
Yeah, something's coming. And you can feel it, guys. It's just times are different right now. I mean, you can just sense it, right? You don't even have to watch any media to sense it. Something's definitely different. You got ICE. ICE is, accidents are happening because ICE is trying to do their job, people getting in the way, and then they're blaming ICE. It's like stand in front of a moving truck, get run over, and blame the guy driving the truck. It's like it's just crazy what's going on. The world has lost its mind, but some people have anyway. But the ironic part is that during the Obama administration, the head of ICE, the same guy who worked for Obama, who got a Medal of Honor from Obama for deporting 2 million people, is the same guy doing it now. 600,000 people removed and nobody entering the country illegally. I mean, like down to zero, first time in history. And everybody's blaming Trump for this aggressive behavior with ICE. But ICE has been around for a long time, and the same guy run it got awards from Obama for doing the same thing. It's all just because of Trump. So what you're seeing, the leftists that are anti-Trump and anti all this stuff, it's not because Trump is doing anything bad. It's Trump is probably doing more good than anybody I've ever seen. But what is the end? What is his end? What is the end game for him? He's not stupid. He may not be able to be a president for a third term. He probably could. There probably is some way to do that, but I don't think he wants to be. But he did set himself up to be the leader of the freaking World Economic Forum, but not as we know it, but at a totally different name. What's it called? Department of Peace or something, or I forget what he called it, but
wouldn't it be that something peace?
Something peace, but I can't remember.
I think it's Board of Peace.
Yeah. And he's got world leaders from around the world, including even the BRICS nations, all joining it, guys. It's like crazy. He's flipping everybody back, and it's like, because they all realize that all of the changes he made, they all want. They don't want. I mean, has anybody been to Paris lately? Has anybody been to London lately? They don't want what's happening.
That's a shithole over there.
It's going nuts everywhere. It's just nuts. So what Trump is doing here in the United States had to be done. Otherwise, it would have been a slippery slope into chaos over the coming decade. So it's the shit storm before, there has to be a shit storm before it's cleaned up. And a hurricane comes, the hurricane's coming, but that once it's done and the disaster and the destruction happens, then everybody gets together and cleans everything up and it's beautiful again. Like here in Florida. But, we know the hurricane's about to hit. We know it's going to be a shit storm for a couple weeks. And then a month later, everything's back to normal. But the point is that before everything gets really good, Trump's basically announcing it's going to be good. We're going into a golden age, but it's going to be tough before that happens. I think we're going to see some craziness before that happens.
Dude, we're already seeing it now, bro.
Yeah,
sure. You guys want to go play catch with some flashbangs in the streets and see what happens?
Listen, this is still staying with crypto, but I just tell everybody, make sure you have your gun owner, you have your family protected, because you're going to need that.
Yeah, you may need it. Yeah. Hopefully it won't come to that, guys. I mean, I don't like to ever talk, doom and gloom or worst case scenarios, but we have talked about worst case scenarios before. And some people ask, well, what if this, or what if this, or what if this? If an EMT gets lit off from some foreign nation above the US and the power grid goes out for days or weeks or months on end, then you're talking chaos. Because most people can't even survive. And I see this in Florida when our power goes out for like 3 days because of a hurricane. People freak out. They don't know how to light a match. They don't know how to build a fire. They don't know what to do with their stuff in the refrigerator. They can't. They just can't handle it. You ever see those people that teach people how to be survivalists? You ever see those survivalist shows? How to live in the woods for a month or a couple weeks or even 3 days. Most people couldn't survive 2 days without the creature comforts. They just couldn't. A candle? Shit. Light a candle? Electricity's out? I don't have candles. I don't have matches. My lighter's out. I don't even have any lighter fluid. Go to Home Depot. Go to the store. Empty. Everything's empty. Why? Because people stocked up on all that stuff. Toilet paper? Shit. No pun intended, but try to get that when the hurricane's coming.
You know what I tell people too? Train yourself to eat less.
Yeah. But, if you just know some basic stuff, I think it's smart, guys. And, the people who are like the real survivalist guys who have the bunkers and the storage of food and all this stuff for months on end and all this stuff. We laugh at them when we watch them do that stuff. But those are the people you wish you knew when the shit hits the fan. So anyway, we go into a zombie apocalypse, guys. I'm not so sure, if the power goes out and the internet goes out, I'm not so sure that you're going to be overly concerned with your crypto at the moment. But at the same time, if you have it on a cold storage wallet, it'll still be there when the power goes back on. If it's on a centralized exchange, you really don't know, because by the time everything goes back on, they could just claim that they had a, infrastructure collapse, or they could file chapter 13 or 11 or reorganization. Your crypto could be tied up in litigation for years if you ever get it back. So That's why it's better to be safe than sorry and have a cold storage wallet for the crypto that you plan on holding for long term. Obviously, if you're going to trade, you got to keep some in your trading account. So these are worst case scenarios. I'm not expecting worst case scenarios. I think we still live in the best country in the world. Now, Dubai might argue with that and say, hey, move here and you don't have to pay taxes, but you're going to have different issues in Dubai. You're going to have a culture shock there too.
Hey, I've got a comment and a question.
Yeah, go ahead.
First of all, I completely agree with what Chad said about October 10th. I think that was so damaging to the mindset of particularly retail traders that many of them will never touch it again. And I'm not quite in that same boat, but I'm much more skittish and certainly reluctant to ever get long with much leverage ever again. Now, I've heard different explanations, including kind of an apologist explanation from Tom Lee, very technical explanation of what happened there, and I think that was all just kind of BS. I mean, I didn't buy it, his explanation. I think it was sheer manipulation. But here's my question. Why do you never see the reverse happening to wipe out the shorts rather than to wipe out the longs? Why does that never happen? The reverse of a flash crash. Why don't you see things shooting through the roof the way they went through the floor on that day? I think it's because retail tends to be long. That's as simple as that. So if you want to wipe out the weak hands, you drive things down, but it could never work in reverse. What are your thoughts about that?
Yeah,
especially at tops too. Especially at, you have to realize as well that happened on October 10th. We had just put in a new all-time high like the day before, right? So I mean, for your perspective and thesis, I think you're spot on. Retail is going to be at tops. That's when that hysteria and mania, oh, this is going to be the big breakout. That's when that is manipulated even further.
Yep. Well, to see XRP go to like $1.30 as it did that day, we would not even have had to been at a top for that to be effective for their purposes. We could have been at $2, and to wipe people out, $1.30 would have been plenty, even from a relatively lower beginning. I mean, it was devastating. A lot of people, I've heard stories of people of suicides that followed because of people position being wiped out. Yeah. And my concern is this could happen any day, anytime. It could happen again.
Yes, you're right. So this is it right here on Bitcoin. It was a 20% drop on Bitcoin right there. But we were talking about in the group that we had a triple top. We were talking about the fact that we could be ready for a big pullback. Now, this just so happened to happen the day that Trump announced a 120% tariff on China. So they could say that had some correlation. I don't really know about what Tom Lee said.
I remember hearing that explanation, and I think people have short memories because Trump said all kinds of threatening stuff about tariffs all year, and this was just overemphasis on what to me was not a significant factor.
Yeah, no, it's not. But the fear and why doesn't this happen the other direction? I guess it's the same way that planes don't crash up either. When they crash, they don't go up. When they crash, they come down. But at the same time, that doesn't make sense in the financial markets. But when we do have a pullback like this and it just bounces, I mean, it hits the floor like hard and just stops, right? Here's what's happening that you don't really realize. It's not that it just dropped from this price to this price. It dropped from this price to this price, which liquidated a bunch of people, which caused a domino reaction of liquidations all the way down. So it's boom, 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 domino effect of liquidation. So what it looks like here if you look at the heat map, let me just go to, it looks more like a domino effect of people just getting liquidated and wiped out, but you don't really see that. Interesting. Hold on one sec. When it cuts through these levels, just like this right here, like if it comes down and cuts through this, these levels of liquidity, it drops to the next level, to the next level, to the next level a lot of times. And it just imagine all of this right here being really bright orange up here with liquidity, and it hits it and it starts to slice through it, and liquidation happens along the way. And it's like a domino effect. So it just keeps dropping until everyone's liquidated. All those longs, like you were saying, and all those people that were in these high level positions. But like to your question, why doesn't it happen the other way? Where we have a domino effect going up. And I can go and probably show you where it actually does do that sometimes. And it looks like this, where we have what it really is let me go back. Let me go to the other chart here and show you what it really is. Sometimes is this. The opposite direction does happen. So when we break out of a resistance level, it's a domino effect to the upside sometimes, where we have a breakthrough position and people's long conditional orders are being triggered long, and that does happen the opposite direction. It's just that when you're not in it, you don't notice. You're like, oh shit, I didn't benefit from that because I wasn't in a long position. But when you're in a long position and it drops against you, you notice because you got taken out. But this happens. Let me go back here. This happened here. Boom, we break out and see every one of these little increments right here. This is a daily time frame, and other long positions are being triggered. Conditional orders are being triggered long, boom, 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 to the upside. It happens. It does happen in the opposite direction. It's just when it happens in the downward direction, the people that are long get liquidated. When it happens in an upward direction, the people that are short are getting liquidated, but also long positions that are, let's say, above this level. Like, let's say I'm going to go long as soon as it gets above 31K, because as soon as it breaks this resistance, I'm long. So I'm going to put my conditional limit order here, long. As soon as it gets through there, it triggers it, bam. $1 million long positions get added to the market, boom, 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 and it starts to trigger the same thing up. And look at this, just keep going. Look at this. So yeah, it does happen the opposite direction. You just don't notice it because you're not in it. You're not in those. Unless you are in those, then you wake up one morning. And this happened to people in this group, including myself and Chad, where we just wake up huge in profit sometimes.
I've been liquidated in both ends, long and shorts. So
yeah,
you know,
exactly.
and that also happens a lot in scalp trading. You know, when you're in those short trades, you go long or you go short, and you could get liquidated on any area. It doesn't matter.
Yeah, that was an unfortunate thing, and none of us did expect this. But look at it here. Look at it here. This is it. Boom, boom. And where did it fall to? It fell to what Chad was just talking about earlier, the mean. It fell to the mean, the upward trending support. Look at this line right here going all the way back to the bear market bottom. Look at this upward trending support. Hit it here. This is a big drop right here. Boom, bounced on it, climbed to a newer high, came down and retested it here. Boom, climbed to a new high. And then that big drop that you're talking about on October 10th came right to that line. Boom. Bounced and then fell through. Tried to retest, and this was even a bigger drop right here. But yeah, now if we look at it on XRP, looks a little different. It was a bigger drop on XRP for sure, because so many people are long on XRP. No one expected this. So this is a cascading liquidation effect, and then billions came right back in. Billions, like $3.5–4 billion. Sucked it right back up, right back into the market, boom, right back up into this channel. So we were in a downward trend. We're still in it. This is actually the line right here. I have it here just because there's a lot of there's a lot of tops here that we hit and then held support and then hit and then support, and then went through, and then, support and resistance here. So it's possible we broke out and came back in, and we're breaking out. But if I put this line to the top of all of the wicks, we're still in the overall downward trending channel, somewhere in the middle. And but I mean, it does happen in both directions. It's just most people don't win when it happens. Because the masses and the majority of the people bet wrong. The majority of people, when they place their bets, they're wrong. That's why they get liquidated and pissed off, because they're not market makers or movers, so they're not seeing what the market movers are doing. So you generally aren't on the winning end. That's why most people say, it never happens to me. I never get lucky and all of a sudden find a wallet full of $10,000 bills. It's true. Most people don't get lucky. It's not luck. That's why. It's but some people do, right? I mean, I've been in positions where it could have went either way, and I stayed in it and got lucky. Woke up, way up, because something like this happened while I was sleeping or when I wasn't paying attention, and I was in a long or short. It's also happened where I got taken out of my stop. So, but yeah, like what you were saying first there, Tom, is that you if you notice most of my trades and signals that I give let me just go back over here and show you. Most of them, when I give a signal or when I'm in a trade or I'm showing you my open positions, let's just go back where you can see my actual open positions. I'm only like 10x, 20x. I'm never at 100x. I mean, we got a lot of people trading with huge leverage, but I'm usually never trading with that much leverage, to be honest with you. And it's not that I couldn't. I mean, on the live call last week, I think on the live webinar that I did, I traded a whole Bitcoin at 75x leverage, just to give an example. And I have done that before, but it's not something I generally do on a regular basis. And if you really, like, if we break below 70K or something like that, or break below 89K back into the 80s, or maybe get below 85, I might short with higher leverage. But what I'll do is, and what I normally do, like, I'm trying to find something, I can't even find it. Normally when like this one right here, look at it. I was up 1,465%, but I was only at 10x leverage. Imagine if I was at 80x leverage on that. Even here, look at this. Oh, this was it right here. I think I was long 75x. Oh, that wasn't a whole Bitcoin. That was only USD2. 8x on XRP here. So usually not much leverage. I guess I do it sometimes, but most of the time you're going to see whenever I share my screen and I'm in open positions, it's usually 20x or less. Let's look here.
You probably didn't post that live one because it wasn't a real signal.
Yeah, it wasn't a signal. I was just giving a demonstration on the live call. But here's open positions 10x, 10x, 8x. I'm usually not. Now, when it go into profit, that's a different story. So, like, here's the thing, guys. When you're in profit and you're up 20% into profit, let's say this went up and I was up 20%, I will move my stop loss to. You move your stop loss to inside of break even, like in maybe even 3 or 4% into profit, just to make sure that you're in a no risk trade. If I'm still thinking it's going to continue up, I can certainly increase my leverage at that point, but I would also have to add more contracts in order for that to make a difference. Otherwise, I'm just lowering my margin. So if I add more contracts and increase my leverage to a much higher leverage amount, as long as, well, since I'm in profit and my stop loss is in profit, it doesn't matter. I can't lose anything. So that's the safe time to do it. So Tom, for you is that you can trade with big leverage if you want, but you got to make sure you're already in profit and your stop loss is already moving into profit if you want to.
With the degree of drop that happened on October 10th, like basically the price gets cut in half in a single hour. Even 2x leverage, you'd get wiped out. 3x leverage, you'd get wiped out. I mean, if you're in at 260 with 3x leverage and it drops to $1.30, you're dead. You're out. So
You're saying your stop loss wouldn't get hit? You mean just skipping right over your stop loss and liquidating?
Well, that's true. That's one reason, because your stop loss, it blows right past it. But if you have no stop loss, obviously.
Yeah. Well, I would never recommend you trade with no stop loss, but people do it. Yeah.
Yeah. Speaking as a retail trader, there's a reason that I tend to be long and not short. And that is the possibility of a, 10x, 100x gain with something like XRP. In a short position, I can only lose what I've invested, but on the long side, the rewards are much greater than the potential losses on the short side. That's why retail tends to be long, I think.
Yeah. Oh, by the way, guys, before I continue with that, just so you guys know, Bill, the basics call started right now. So normally I'll let you know right before 2, but if you're new, relatively new, get on the basics call with Bill. He shares the link in the announcements channel. He shares it in the trade chat. Here it is right here in the announcements channel. In the trade chat, he shares it right here. And also on this Zoom call that we're on right now in the chat. Go into the chat. He just shared it as well. So get on the basics call if you're brand new or relatively new. It's a great call to be on for any basics as far as setting things up, going long, going short, understanding the basics. Okay, there it is right here in the chat.
Thanks, Niko. I'll talk to you later. Bye.
Okay.
Yeah. All right, guys. Yeah, definitely get on that. All right, guys. We're going to wrap it up here, but I think that we got some buying pressure coming up right now. Obviously, we are bouncing a little bit on this. Where am I right now? Let me look at this. Let me get rid of some of these lines because it's starting to look a little nuts. Sometimes I share screenshots from my laptop. So in the Discord when I'm giving you like updates and stuff, but it might look different than what I'm sharing here right now. That's because that's coming from my laptop. And my chart looks a little different over there. But as you can see, we have bounced here on this upward trending support and we are climbing, but we have a little bit of a, I would say, we do have something to get through here. Yeah, I would say right about here. We might be coming up to that right now. It might even be right here. So just be careful. I wouldn't enter, me personally, I'm not going to enter a position on Bitcoin right now. I will post a signal in the signal channel if we got a break out of this little apex here, but I think we need to make a higher high. We could just be coming up to double top here. We could come back down and test this support. And what is this white line right here? If I zoom out, just so you see it, it is this line right here. I'm going to change the color so you can see it clearly. This blue line. It's the overall upward trending support going back quite a ways to the bear market bottom. We're bouncing on it. Now, there are other ones. I mean, I could take this line right here and go from just this bottom right here, where we were down at like 49K. We already broke through that. I could go from this line right, this one here, touch that one, touch that one, touch that one. This one, this one, this one, boom, 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 and then boom, we broke through that one and we're retesting. So that could be, we could be retesting underneath that as resistance, right? So depending on what upward trending support line we're looking at, it could be below one and above another one. This one right here, we dipped below it here and we held it here. And we've been above it ever since, this blue line, and we're still above it right now. But if we drop below that, that's the last one. I mean, this one, this white one, I'll make it yellow. So we got this yellow one. That was upward trending from down in the 20,000 range. And we have, or this, we're just from here to here that we already broke through that one. So we're retesting this yellow one as resistance. We're holding support on the blue one. If we break below that, then I'm afraid that if we get below the 80, which was this low right here, we could have a double bottom at 80. But if we get below that, then we're probably going to come down and retest the 74 somewhere in this range here, this previous support that we had here, that would probably be the next step down. Now, hopefully we can get back up here to 100, maybe even get above it and hold. And then I would say that we're coming up to the 109, 110 range. But we got a little ways to go before I'm going to be saying that in the group personally.
Niko, can you do a quick review on XRP as well?
Yeah, I mean, look back here, guys. We had resistance here at 93, support, 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 resistance, support, 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 resistance, resistance, resistance. So I would say we got to even get above 93 before we can even break through. XRP is correlating, guys, so it's kind of hard. You know, I mean, we're upward trending in XRP. We did break out of the downward trending falling wedge, this falling wedge right here in the green. But remember, that falling wedge, which is bullish, and we did break out to the upside, is still inside of the overall downward trending channel. This whole channel right here is still downward trending, and we didn't get out of it here. We're in this falling wedge. We just broke out of this falling wedge. I would say we need to get above $1.93 on that. Unless, if I just take this line all the way back, guys, you'll see it was resistance back here, support here, support there. And support there. Right? And support there, support there, support back here. That $1.93 has been around for a while, and we're just coming up to hit it right now again as resistance. We got to get through it. The good news is this is a falling wedge, which is bullish. It's bouncing on the floor. We broke out of it, and it's above the center line on the downward trending channel. That's all bullish. But right here, we're having resistance right here at $1.93. If we get above that, then we're going to see a higher high, maybe up to $2. We get above that. We got the next one up here at 203 or so. I won't worry about that until we get above this $1.93. If I see that, I'll be entering long again. We're too close to it right now for me to go long again. I was in a long, and I moved my stop loss into profit, and this wick right here took me out. I moved it up. I'm very careful now when I'm in my longs on XRP. As soon as it goes up 25% into profit on my trade, because I was at leverage, I moved my stop loss up because I want to be in it in case we have a parabolic move. But at the same time, I want to be taken out of it if we're just going to keep dropping. And so, and I want to be taken out with a little bit more XRP every time.
Niko.
Yeah.
So okay, I'm in profit on XRP right now. Where would you set your stop loss to feel safe, maximize your position, but to try to stay in, just what you were talking about? Because I'm doing exactly the same thing, but I'm not exactly sure where to set my stop loss. And two, the next one, I was in Bitcoin. I managed to get out at the early this morning high, but I was playing with my leverage and everything. I could see that I was cutting down my margin. But the only way I can see to, once I've increased my leverage to increase my contracts, is to increase my margin. Is that correct? And I'm just not giving it enough time to see a difference in the profit?
Yeah, because if you just increase your leverage, you're cutting your margin down. So if you have 10x leverage, let's just say, and you have $100 at risk on the trade, your margin, and you double your leverage from 10x to 20x, then you're dropping your margin from $100 to $50.
Right, but then to add contracts to that, then I need to bump the margin back up at that higher leverage, correct?
So you would want to add 50 more contracts, 50 more contracts back to bring it back up to $100 if you wanted to keep it at $100 risk with twice the leverage. So you'd have to, if you double your leverage, you have to double your contracts.
And how long will it take to see that as an increase in your percentage and profit?
It would have to continue to go in the direction that you want it to go. And then from whatever the price is where you added more contracts, it would have to go up from there at the new leverage amount for it to start going, for that change to start being noticeable.
Okay, that's kind of what I was thinking. I just wanted to be sure. And then what do you think is a safe place on XRP
what's your
for
entry?
stop loss? My entry on XRP was, I think it was like $1.86, right around there. I'd have to look at it.
All right, that's good. So you got in down somewhere on the
I got in way down there. Yeah.
Yeah. All right, good. So what you could do, and what I did, and what I normally do is that when it's up this much higher than my entry, let's say my entry was right here to $1.87, I would put my stop loss at least into profit. Doesn't have to be a lot into profit, but just above your entry. So that way, if it does wick down back, if it breaks this upward trending support right here and it wicks back down, it takes you out here, and it probably will just bounce where your entry was anyway. But now,
and that's basically what I've done.
Yeah. Now, what you could do now that it's gone up a little higher and it's still holding, now that this wick came down and it came back above, you could move your stop loss up to right under this wick, which would be about $1.89, maybe even a little lower, like maybe $1.80. Yeah, $1.89, right under this bump, this double bottom. The reason why is because it's kind of like a little bit of a double bottom thing going on here.
Yeah.
So you want to keep it under that. And then if this continues up, the way I normally do it is if this goes up and it finally breaks above this and holds this as support and starts to climb, then I would take my stop loss that was here and I would move it up right under this.
Okay. That's kind of what I've been trying to do, but I'm obviously very new at this and I just want to be safe and not get taken out.
Yeah. And guys, you're going to get taken out. So you're going to get taken out sometimes. So the question is are you going to get taken out at a loss or at a break even or in profit? So you choose. Some people tend to not move their stop losses for a while because they want to give it lots of room. Okay, well, if you're up 20% or more. Now, when I say up 20%, I don't mean that the price moved 20%. I mean the price could have moved 2%. But if you're at 10x leverage, that's 20%, right? If you're at 10x leverage, so that's a 20% move. A 2% move in the market times 10, right? So if your margin down here or your unrealized P&L down here is showing that you're over 15 to 20% into profit, move your stop loss to at least 1 or 2% into profit. Because you don't want it to be right at break even, because break even, if it hits it, you will still lose. Because you're going to have your realized P&L, you're going to have the fees, right? For the entry, the maker and taker fee, which could be just a couple percentage gains. So you want to be at least 2 to 3% into profit to at least really break even. Anything above that, you would take a little bit of a profit. So if you're 20% into profit, you could move it to 5%, 6%, 7% into profit just to give it room. And then if you go up to 30, 40% into profit, you move it to 10, 15% into profit. You do want to give it some room, but it's not a matter of room. It's a matter of where was the last support. So if I entered here, let me just show you. If I entered here and then the price went up like this and held support here, I would have moved my stop loss up to here. The price came up and it bounced here. Oh, lucky I didn't get taken out because this was a little double bottom, kind of like this one over here. We got that little double bottom and that little double bottom. And my stop loss was under that. So I was safe. It bounced. It went up higher. It came down and bounced again. Went up higher, came up and bounced again. I will probably take my stop loss now and move it up to maybe here, because that's under this double bottom. Now, if it goes up here and holds this, I would grab my stop loss and move it up again, probably to right under there. as long as it holds above this. You know what I'm saying? So you're incrementally moving your stop loss, but not so close that you're going to be taken out. You want to make sure you're still keeping it under certain support levels, the most previous support levels. If that makes sense. But you have to obviously have your lines drawn properly. It's just same thing on the way down. If I entered here to short, or I entered here on the breakout, let's just say, my stop loss might have been 10% away above the most previous high. It comes all the way back up, boom, doesn't take me out because it's like a little double top. Doesn't take me out because my stop loss is above that. Then it drops and starts to come down and bounces way down here. Comes up, lower high. So I'm going to grab my stop loss, move it down to there, let's just say. Comes down below this. Now it's way below this. So I would probably move my stop loss to here. Came down all the way down to this. Now this line wouldn't be there at that point because we're still in the downward trend. And it came all the way down and bounced on this, and it's starting to come up. Now this line would be here because I have this falling wedge line here. As soon as it bounces here and starts to come up, I would probably just close the takeout, close the trade and take a profit. Or maybe I would close it as soon as it hit this. Or what you could do is as it's falling, you just keep moving your stop loss down, knowing it's going to get hit, but you're okay because if it bounces here, you know this was the bottom. If it doesn't bounce here and it keeps going, great. You just stay in it. You just keep moving your stop loss down. But if it bounces here, let it take you out right here. Boom. You move your stop loss close because if it bounces, you want to get taken out as close to this level as possible. If it doesn't bounce, you're just going to stay in. That's all.
Niko, I kind of do the same thing. I put my initial stop loss in, and then I put a trailing stop loss a little bit farther behind it. So if I'm not watching it and it's going up, I know I'm going to be a little bit in a profit. It's going to be safe.
Yeah. Yeah, and you can use trailing stops as well, guys. I personally don't because I like to just pay it. I just like to watch and I like to maneuver it wherever I want. But if you know you're not going to be sitting at your desk and you want to have a trailing stop, you can do that. If you know how to do it, you just go over here to TPSL. You got to be in a trade to do it. And then you click on the little pencil and your open position. It's going to pull up that little thing and you just click on trailing stops and you can put in the percentage that you want it to trail. I don't use them because I like to manually move my stop where I want it, but you can certainly do that at least. Is because if it does just take off in one direction, you definitely want your stop to move into profit. Either do it manually, but if you know you're not going to watch, then yeah, try a trailing stop.
I usually put both in just because I know I put my stop loss in and then I'll put a trailing one behind it. And as that goes up, when I come back to the computer, I can always move the stop loss up higher that I originally put in.
Yeah, good idea. And if you know how to do it, guys, then do it. But if you don't, get on the basics call and ask Bill. Bill will teach you and show you how to do all that stuff.
What kind of percentage do you use on your trailing stop?
Who was using trailing stops? I would say 5%, 10%.
By the way, can I jump in on that?
Yeah, go ahead, Kim.
The percentage in your trailing stop is the actual motion of the price action. For example, 0.0, 0.5%, 0.25%. It won't let you do 0.25 because it only lets you do tenths of a percent. But that's going to be the kind of trailing stop you probably want if it's a small time frame.
Yeah, this is the problem with them to me. Like if we get an incremental pump like this and your trailing stop moves up incrementally equal to the move in the market, and then it comes back and takes out your trailing stop and then it continues up, you just got to know how to adjust your trailing stop so that it doesn't follow too close to the price.
Hey, Niko, would you say that that we're sort of trending into an apex here on XRP?
Yes.
With that 94 at the top, and then we're on that upward trending line there.
Yeah. $1.94 and this upward trending, this and this. Yep. That's an apex.
Right. What do you think? You think we'll get any moves off of that? Or?
That's what I'm waiting for. I will long the breakout here, and I will short the breakout. Oops. I will long the breakout if it breaks above this. But if it goes below this line and starts to drop, then I probably will short.
Yeah, that 94 area is pretty stingy, huh?
Yeah, well, it has been. I mean, it was support for a while, and it's been resistance for a little while. It's not too tough. I mean, we had some resistance here, resistance here, resistance here, and we are upward trending from the floor. The good news is that we've already bounced down here on the $1.80, which is pretty much the floor where we dropped down to here. This is the floor down here at $1.70. And there have been times, if I zoom out, you'll see there has been times when we hit that red line. That's this red line down here. This one. If I go all the way back, we hit it. We did wick down to it here, and we came close to it here. And then this one, this was the big drop on October 10th, where we dropped all the way down to $1.20, but a couple of anomalies there. But this, to me, I'll even tighten that up a little bit to $1.75, let's just say.
Yeah, that's where I have mine. Yeah.
Yeah, that's pretty good because we hit it here, and we came really close to it here, and then we came close here to $1.78, here $1.76. So that's pretty much the floor. But we bounced here to $1.80, and we did break to the upside of the downward trending falling wedge, which is bullish. So, but we do need to get above this little $1.94 here in order for us to continue up. But it makes sense that we will, though, just to be clear, because this blue dotted line right here, that's the middle of the overall downward trending channel. And the fact that we were already below here in the $1.70 range, and we bounced and went to the top of this downward trending channel, and we've been bouncing on the center line, that's usually a good sign. Generally speaking, breakouts of an overall downward trending channel like this, breakouts to the upside, when we get up here and break out, that usually happens after. Let me just get rid of some of this stuff here. Breakouts usually happen after we hit the bottom of the floor, we hit the top of the channel, and we bounce on the center line. That's usually, every time you see a big breakout of a big downward trend channel like this, if you go back and look, chances are we hit the top of the channel and then retested the center line before it broke out. So it's possible that this is the time that happens. If we can't hold above the center line and we fall all the way back down to the bottom of this overall channel, that means we're below the floor, not good, and lower lows could happen. But every time in the last year that we got down to this range, not only did we bounce, but we bounced way up high. Bounced way up high. Bounced way up high. Bounced way back up high. Bounced. I'm expecting a bounce here.
Cool. Thanks, Niko.
Yes, sir. All right, guys. That's pretty much it for now. I think I'll let you know if I see anything. We've been on for 2.5 hours, but I think that we are breaking out of the downward trending falling wedge, which is good. We're bouncing on the center line, which is good. If we get above the $1.94 on XRP, then we're kind of in the clear to go up to the next level, which would be the $2 range somewhere up here. And that's a nice little run up, by the way. If you're in a trade, if you catch this breakout and it goes up to that, that's a 5% move in the market just to $2. And at 10x leverage, that's 50% gain. If we get up to the top of the channel, that's 8 to 10%, or maybe 8%, 9%. 10x leverage, that's a 90% move from this breakout. So
excuse me, Niko.
Yep.
One question. Did you say you had an update on Optio?
Oh, yeah. Thanks for reminding me. Only that I did share a link, but I erased it because it wasn't ready yet. Let me go back and look what Billy said. He first sent me that link for optiocloud.io. Let me just go to it and see if it's working yet. Let me go to Optio Cloud. OptioCloud.io. I mean, when I first shared it with you guys, I think there was a buy. It said buy Optio right here. Purchase, stake, earn. Yeah, it's a little confusing to me. I don't see any buy buttons. It does look like you gotta open up an account first. So let me get, and then I deleted it. I deleted it. I had it. Oh, somebody, Norman shared it. It's got a different link on the end of that. By opt, but it's not going to that. So I think they're working on it. But anyway, Billy responded saying, he said he's working on it. Try now, he said. And then I said, still not working unless it's just crypto payments. He said, you are right. He is working on it now. That was last night. So nothing since. I sent him a text already this morning saying, I don't think it works still. Let me know if you have any updates. Having a call with my group today. They all remember you saying they could buy Optio on Kyvo by the end of last week. So I'm cautious on what to tell everybody unless you are very sure. I don't want them to just tell me, oh, try it now. And I tell you guys when it's not ready yet. So I've been waiting to make sure everything's working first before telling you. Let me go look at actual Kyvo. So I don't think it's available there yet either.
Is that the only place you can buy it at, Niko?
Well, you were able to buy it on CoinStore. CoinStore, but somebody said they couldn't anymore. I don't know if anybody's tried. MEXC, it was listed on MEXC, but I don't know if it's still listed there or not. Anybody else? No?
I bought a bunch on CoinStore, but it was a couple of weeks ago, and it worked fine.
Yeah, it's showing on MEXC still.
Where?
MEXC.
MEXC.
Yeah, it's listed at 0.002120 right now.
I can't even log into Kyvo at the moment. So they're working. I know they're working on some things. They're making changes, but I was told that it was in. Let me try my app. I was told that it would be available to buy on Kyvo soon. I know they're working on it, which is your wallet. As of right now, I don't see a buy button. I'm logged into the app on my phone. For some reason on my desktop, it's not logging in.
Now,
So do your nodes automatically sync up?
Yes.
In the background, you just got to, as long as you're set up with Simple and bought the nodes and set up the Kyvo wallet.
Yeah.
Just links. They do it in-house, basically.
Yeah,
They
it's
all
based
up.
on your email address. As long as you're using the same email address and everything, they search for your order, and then it syncs up with Kaivo and the wallet, and you'll see them starting to populate there. It'll be pending. Takes a couple days for them to start being available or active on in your wallet, but it'll show as pending. Like right now, I always have 2 or 3 days pending, and then one of those days will be no longer pending, but then there'll be a new day pending. Tomorrow there'll be another day pending, but one of the previous pending days will no longer be pending. You know what I mean? So it's always like 2 or 3 days behind. So some people are asking me in DMs, hey, I got everything synced up, it's showing, but it's showing pending. I'm like, yeah, it takes a couple days for them to start. Took up to 5 days for some people.
Yeah, so you don't have to do anything to sync up, from what I understand.
No.
The instructions don't really show anything, and then when you go through the process, it's like those are all separate transactions, and there's zero connection between them. So it has to be in-house somehow.
Yeah, it is. They're syncing. They're definitely syncing.
I have a question for you. Have you ever noticed how some crypto investors hit those life-changing milestones while most struggle just?
Hold on, guys. I don't know.
Small groups
All of a
seem to know
sudden,
exactly when to buy and when to sell, while most still.
I
feel
hear me
excited
talking,
with
but I
prices.
don't know where it's coming
And
from.
most importantly, how come these investors have built a system that?
Okay, sorry about that. I accidentally clicked on a tab and it started talking. Yeah, so hold on, I was trying to show you guys something here, but so just to give you an example, this is simple back office and simple. As long as these are all online and green. Now, if you're new and you just bought them, it might not be active yet. It might say pending or searching or something like that. You might have something up here showing, how many licenses you have and how many are active, and maybe that doesn't match up. But there might be a little note up here, and then all you got to do is click support and let them know if you're having a problem. But once these are green, then, and as soon as you download Kaivo and log in, it's going to automatically, there's a place in Kaivo you can go to see how many licenses you have. I don't know why my Kaivo is not opening right now. Let me unpin this.
Niko, when you added more nodes after you decided you wanted to get more, did you have to go back into Simple and add more? Because like my Simple back office says that I've got the 20 is the maximum, but you can go in and add more because the $29 monthly fee allows you 100, right?
Correct. But you do have to change the amount that you have up to the amount you have. So I think right here. So let's just say I only had 20 and I just added another 40. I'd have to go over here and manage plan, I think. And then you have to put this up to the amount that you have now. And then click update plan. But it's not going to charge you more because you're already at the plan that can handle up to 100. But you do have to kind of go in here and adjust this.
Okay, gotcha. Thank you.
Yeah.
So that if you bought them all at once, it'll automatically populate that right there.
Yes, and it should show here. You click on overview, it should show how many licenses you have, how many are active, and what your plan limit is. My plan limit says 60 because that's what I set it to, but actually I can go up to 100 for this plan right here. And then right here, you got a little note. Everything looks great. Your nodes are running and no action needed. But if it's not great, it'll tell you right here if you need to do anything. It'll tell you, contact support or whatever. And you just click support and send them a message, and they'll send you an email telling you it was fixed. I mean, they're very quick. Click on nodes.
And then you don't have to do anything.
Then you don't have to do anything. Once it's running, but I do log in and check every once in a while just to make sure. But I was trying to show you my login on Kaivo because on Kaivo, I don't know what's going on with Kaivo right now. Anybody else have a problem logging into Kaivo? Not let me log in.
Speaking of Kaivo, Niko, just wonder which validator we should use for the staking.
Billy mentioned one. I can't remember what the, hold on one
He
second.
said the first one.
I don't think it was, I don't think it was the first one.
Moves position, so
No.
it ends in FOF.
Yeah, very last one, I think. I'm sorry.
Yeah.
Yeah, it was,
USOF.
when you click on the validators and you scroll down, it was someone that, someone, one of them that had the letters, what was it? FOF or something?
Yes, FOF. Or F0F.
Yeah, but I don't know why it would matter, to be honest with you. Maybe it's just because that's the one he's using. I have no idea.
Okay, thank you.
Incidentally there, Niko, I was having some difficulty getting into Kaivo a couple days ago, and I managed to get through it through Parlor. Your Parlor account has the Kaivo wallet
Yes.
link, and I clicked on that and I got in.
I'm logged in on my phone without any problems. I for some reason on the desktop, yeah, they're on your phone. You can connect through Parlor or Play TV, but I'm logged into the app on my computer right now, and normally just log right in. But for some reason, it's not. I might have to close this out.
You got the email yesterday, Niko, that Opteo is now pay.parlor.com.
Yeah, I think Kaivo's gone, and Kaivo's part of Parlor, because I can't. When I went to Kaivo.ao, it took me right to wallet.partner.parlor.com.
Yeah. And I've had trouble logging in with that too.
I'm logged into Kaivo on my phone. Everything's updated there, but when I log in here on my computer, it's just going to the app, but nothing's happening. It's not redirecting me or anything. I'll get the answers on that too, guys.
Try using an incognito tab. Maybe it could be bad cache information.
Yeah, that could be. Let me try. But I'm trying to remember my passwords and everything. Let me see here. Yeah, you're
But if
right.
everyone,
You're right. It did direct
that
me to
right?
Parlor. Now I got to remember my passwords. I hate it when they do this. And they're sending me a verification code through email, but yeah, I did change the Parlor.
The Kaivo came up fine on my phone, but however, the coin store, it says my assets are there from buying 500,000 coins, but I can't find the coin to buy it again. I don't know what they did on Coin Store.
Eight oh 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 73. Give me 1 second, guys. 80073.
It might take time to propagate if they're switching servers. Just FYI, usually propagation can take 24 to 48 hours for everything to pan out. So just FYI.
Yeah, it worked. I got in. So what I was trying to show you is if you go to distribution, you're going to see these pendings. In the beginning, all you'll see is pending, but then they start getting distributed. So this was pending, this was pending, this was pending. Then this one's distributed. These two are pending now. I have a new pending, and so on and so forth. So I'm always a few days behind pending. But that's, this is if I go to the beginning, or they start out pending and they get distributed. And if you go to my nodes, somewhere in here, I can't remember where, it shows you how many licenses you have and all that stuff. No licenses. No, it doesn't, I don't know why it doesn't say the total amount. You have to literally count them. But so far, just send and receive. I don't see any buy buttons yet. Send and receive up here. And then if you want to click on Opteo here, send, receive, stake. If you click stake and lock, you want to select your validator, start earning, and recommend, let's see, select if you want to stake. lock or stake. So if you click stake, click continue, and then it says select your validator. So click on this, and then you scroll down to the one who's, can't remember which one it was. I don't even see it now. Oh, here it is. It's up here. FOF, F0F. So it's it's 1, 2, 3 down. I don't know why that matters, to be honest with you. But I haven't staked anything yet. I like to be liquid, just in case. Staking locks it up for 21 days, just so you know. But you're only locking up whatever you stake. So if you skip a couple days of staking, you're not staking those, right? You have to actually stake every day. You have to go in here and stake more. So if I stake everything today, then tomorrow I'll have another, 5,000 Optios that are not staked. I would have to go in and stake those. If I want, I can not stake them all. Or
Niko?
stake. Yeah.
Wouldn't that be if you got an amount staked right now and you're waiting for your pending ones to come in, you stake them again. Is that a different stake and a different time zone or different 21-day cycle to get them out?
I think every time you stake, you get 21 days from
It's a different cycle.
I think so, yeah.
Yeah. Okay, thank you.
Yeah, I'm not really an expert on.
It's from unstaking. You tell them you want to unstake it. That's your waiting.
Oh yeah, that's right. That's right. It's not 21 days from the time you stake. It's 21 days from the time you want to unstake it.
Yeah, but each entry, each initial stake is a different staking cycle, isn't it?
Yeah, but if you try to let's say I stake some today and then next week I stake some, I don't have to wait 21 days from either of those. If I want to unstake them both, it's 21 days from the time I try to unstake them.
So they're both going into the same staking account. That's what I'm saying.
Yeah,
Anyway, we'll figure it out.
If you just click stake and then click unstake, you got to wait 21 days, regardless of what day you stake them. I guess that's what I understand.
Stake some coins today for a year. Then 1 year from now, you unstake it. Takes 21 days to unstake it. Tomorrow, if you stake those, it'll be a year from tomorrow plus 21 days to unstake it. That's the way Billy had explained it. Because you have to have it for whatever period you stake it for. If it's 6 months, a year, 2 years, whatever period you're staking it for, it's locked up for that period. And
if you stake and lock, yes.
Yes.
There are options to lock up, stake and lock, or just stake.
Hey, Niko, did you, I think my computer's been dragging this whole webinar, basically. Did you get to Parlor here? Do you have a separate account, or did you get to it through Kaivo, or how'd you get here? I didn't, all of a sudden it showed up on my end.
I just tried to log into Kaivo and it redirected me to Parlor.
Oh, I see. Okay.
Yeah, but on my app, on my phone, it still says Kaivo.
But on the computer, it took you to Parlor.
Also on my Android app, there's no update on the Kaivo app.
Yeah. It'll probably have an update. You'll probably go to log in on your app and it'll tell you to click here to update, and then it'll just update automatically. It looks like they're trying to take it all in-house. I mean, it all is Parlor, so I guess rather than making it confusing for people to have all these different steps or to have all these different accounts, it'll just gonna put it all under one parent company, I guess. That I am not 100% sure on, but I did ask Billy. He hasn't responded yet. Well, let me see if he did or not. No, he has not yet. But I will let you know if I get any answers to that. In the meantime, I'm just, I'm just minting. I'm just minting tokens. Hopefully it'll pay off someday. The problem is I did that on my incognito, so I cannot add that tab. Log out.
And then, Niko, do you got any insight on security? Like, I mean, obviously it's different than a cold wallet, but it's essentially a hot wallet on their system. But do you have any insight on security to protect what you've purchased and what you're minting? Are you using a VPN all the time to access that?
No. Yes, I have malware and I have all kinds of stuff on my desktop PC through Norton antivirus and things like that. But that's pretty much it.
Okay.
I mean, I do recommend that you. I mean, the safest way would be to not use your computer for anything else other than your crypto stuff. But that's impractical for some people. Like if you're checking emails and you're going to websites and YouTube and you're all over the place, then you're opening yourself up to the possibility of being hacked. But if you have anti-hacking, malware and all that stuff on your computer, then very rarely my computer pops up with these little things all the time, warning detected or this detected and prevented and all this stuff. So it's blocking people from trying to not hack me, but to malware, to spyware, whatever it is. It's preventing all that.
Right. Are you every time you go into Phemex, are you using a VPN?
No, I don't.
Just the one time when you set it up, you use the VPN.
No, if you use our referral link, you don't need a VPN. Hold on one second. 685-290, 685-290. Have you set up your account yet with Phemex?
Yeah, we used a VPN to do it because it seemed as if maybe I got the instructions wrong, but it seemed as if that's the route that you had to do. So we set up the VPN out of Italy. I think Chad was saying something like that in the instructions. I have to go back and look.
Oh, you were doing it from the school instructions.
Yeah.
In our school. Yeah, I mean, on a webinar, I mean, I don't know if you watched on the webinar, we gave a link out, a referral link. We got to change that in our school, but we do have a VIP referral link now that can help you bypass the VPN process. We built a relationship with Phemex over the years because we referred so many people. So the link that we refer people now, no VPN. You just have to self-proclaim that you're not a U.S. citizen or not in the U.S. They don't care that you're a U.S. citizen. It's just your location that's the problem because they don't have they don't comply with U.S. regulations, so they're not allowed to advertise in the U.S. So if you're trying to log in from the U.S., you're going to get a pop-up window that says, "Sorry, you're in a restricted area." That's where VPN comes in. But with our referral link, you just have to. There's a blue instead. The IP restriction comes up, but there's a blue button that just allows you to click it to get past it. But you don't. So now that if you already have an account open using a VPN, you probably don't even need to use your VPN anymore to log in. You just needed that to set up your account. But what you can do is send Bill your UID, your Phemex ID number.
Yeah.
In fact, you can send it to me if you want, and I'll send it over to my contact over there at Phemex and let them know that you're in our group and you didn't use our referral link, and they'll add you over to as a Crypto Renegades VIP member so that you get the same benefits as if you did use our link.
I have to go back and look, but I think we clicked on that referral link in that affiliate link in the instructions in school.
And you still
like two two sets of instructions. One was KYC, and the other was without. And then if you just use the affiliate link, then you can go through that route without KYC.
I have to ask Chad if he's changed that or not.
So maybe I'll have to have you update it. So what are you saying? DM you or something? The UID.
Yeah. Hold on. Let me see if he's. Mm-hmm. I mean, if you used our referral link, then you don't need to worry about it. But if it made you, I mean, you should have been able to open your account. So you said you used a VPN.
Yeah.
Did you have to, or did you?
No, we just followed Chad's instructions. We purchased Proton, and then went through the affiliate link that was listed there.
Yeah. Well, that is, I mean, it's a very safe way to do it, but we don't really need to do that anymore now. So you're probably even more protected if you use Proton and a VPN. When I say protected, I just mean, you're anonymous. You're like Phemex doesn't even know who you are, which is not a bad thing. I mean, your account is your account, only you have login access, but it's not like they're storing your data and your information to give to any agencies or anything like that, which they wouldn't do anyway. They're not required to, and they don't comply to US regulations. So they're not turning your information over to any authority or government authority like Coinbase, for instance. Coinbase, if the IRS asks Coinbase for your information, they'll give it to them.
Yeah,
because they're a government regulated centralized exchange on the New York Stock Exchange. They have to comply with US regulations. Phemex doesn't.
And part of that in the US is for your own protections as well. So it kind of gives a balance and harmony to that here in the US, but overseas like that, what's for a US citizen, non-citizen of wherever that's at, Singapore or whatever, what's the protection for you over there that you're dealing with a foreign entity with foreign regulations? And
it's decentralized. So in the decentralized space, it's for your anonymity. And it's like, a lot of people get scared about that. And they think that the US regulations is for your protection, but it's really for the government's control over you. So you might be thinking that they're going to protect you if something happens, but that's really not that's really not how it works, I don't think.
Right.
Hold on one second.
It gives you more recourse here over there.
It might give you more recourse. Yeah, it might give you more recourse, but
over there, it seems like you wouldn't have any just because they
but you might be correct there. But what we've learned over the years is that every time that there was a big problem with an exchange where people literally lost money or had their accounts hacked or the account got closed or whatever, or there was litigation or whatever, or any problems, it was always a centralized exchange. It was never a decentralized exchange that happened to. And it's kind of funny that way, because that happened to Sam Bankman-Fried with his thing back in the day with what was it?
Yeah, FTC or whatever. Yeah,
the big exchange he had, and Gemini, and you got Kraken. All of them had problems. All of them had that issue, right? But we've never had any issues with the decentralized exchanges. So it's don't keep all your eggs in one basket. I mean, even if you're on Coinbase, even if you're on a centralized exchange, I still don't I don't keep everything on Phemex. I keep enough over there to trade with, but I know guys that have millions of dollars in their Phemex account. So it's and on their Bybit, and MXC and all these different centralized exchanges. I mean, I interviewed the CEO personally of Phemex. You can go watch that on my YouTube channel if you haven't already. And it was founded by Jack Tao, who was ex-CFO of Morgan Stanley. I mean, it's a major exchange. It's just out of Dubai and Singapore. Singapore probably one of the largest financial districts on planet Earth, even bigger than the US. A lot of people think, oh, because it's foreign that, you know, it's in some third world country, but that's not the case. There's more money outside of the US than there is inside the US. So, you know, just, you know, you can worry about it, or you can go trade, you could go set up a trading account on Coinbase Pro, but you only get up to like 5x leverage, and they're going to be monitoring and reporting everything that you make and earn. So I guess pick your, what do you want? What do you like better? There's people in here that are so anonymous that they don't want a VPN. They don't want a VPN, or they want a VPN, but they don't want a KYC anywhere. And KYC for your customer, you might say, well, that you can do that on Phemex, by the way. You can KYC. And you can use your ID and everything, and so that they know who you are. I'm KYC, just so you know, because I opened my Phemex account before they even had the restriction 5 years ago, before they even had the restriction with the US and all that stuff. And the reason why they have is because complying with the US is not just one thing. It's not complying with the US, it's complying with every single state individually, because every state has its own rules. Some people in New York can't open up accounts at certain crypto platforms, but some people in Florida don't have any problem doing that on those same platforms. So each state has its own regulations. California, high restrictions. New York, more restrictions. Canada, restrictions. North America in general, basically, but we haven't had any problems with it yet. So I'm certainly not vouching for them. I can't guarantee that you won't ever have any problems, but I can't guarantee you won't have any problems on, you know, E-Trade or Fidelity or Coinbase either. You know what I'm saying? We have a lot of people that have had problems on Coinbase. And so I personally have not yet, but Phemex just happens to be the one of choice that we've been using. And they've really taken care of, you know, most of the people in here. There's maybe 1 or 2 people in our entire organization that had a problem with Phemex, or maybe they got liquidated when there was that big dump from, you know, on October 10th. And they blamed Phemex, you know, and Phemex was like one of the only platforms that didn't go down. You know, Bybit had a huge problem. Bybit got sued because of it, but Phemex had the liquidity to handle it. But some people blame Phemex as if Phemex took their money, but really, and I understand why you would get upset if we had a 20% drop all at once and your stop loss didn't get hit and it just liquidated you, because in order for your stop loss to get hit, technically there has to be a buyer, right? In order for your limit order to get hit or sold, if you have a sell order, which is what a stop loss is, it's a sell order at this price, there has to be a buyer. And if the price is dropping so fast, the platform's trying to find you a buyer, but it you know, there's something called what's it called? Slippage. And the slippage is, yeah, you can't, it can only find you a buyer as quick as it can find a buyer. And it finds you a buyer lower than where your stop loss is. So that's where it finds the buyer at. And so you can't, you know, it kind of is what it is when the market's moving that fast. So that's a scary thing. It can happen. It has happened before, but I've only seen that happen once in 5 years where that happened to anybody in our group or anywhere for that matter. And that was on October 10th when we had that huge drop. I had stop losses.
Over your stop loss. It just jumps over your stop loss.
It doesn't gap it. It doesn't gap it. It just goes right through. It doesn't jump over it. It just keeps going in the direction until it finds a buyer for your sell order. And the problem is when something's dropping that fast, the market can't fill all the orders. It just takes too long for all the orders to get filled because it's trying to fill, and it can't fill your order because the price keeps changing. So if you ever try to make a buy order and the price changes, like on Coinbase or anywhere, if you time out because you're taking too long, it has to readjust the price to give you a new price to buy the crypto at, because Bitcoin's going up and down every minute, right? Every second. So if you wait too long, you got to reset it. And same with Ethereum and all these other ones. So when you're talking about, you know, the value of a crypto changing every second, you know, compared to the US dollar, they give you a buy window. And this is, okay, if you buy within this, there's something called slippage. Okay, it could go up or down a few fractions of a penny by the time you click the button. You put your price at $1.80 for XRP, for instance, but it might be $1.79.888 when it fills your order. You know, and you're like, hey, well, I bought it at $1.80. Well, you know, the fractions of a second, the price changed during that time. And that's called slippage. And you have to understand that. But if the price is dropping drastically during that time, it's not normally a good time for you to try to buy or sell. But if you're already in a trade and you have a stop loss in place, it's trying to fill your order, but it can't find a buyer quick enough. And when it finally does, it could have been catastrophic for some people. Could have, taken them out or liquidate them if it goes down far enough. But that also depends on how much leverage you have and how close your liquidation price is to that big dump. If your liquidation is far away, you're not going to have that problem. But some people are just trading with high leverage and high risk, and therefore they're taking bigger risk. So
in that situation, is it better to have or can you even put your stop loss at a market versus a limit?
I always do put a market.
Oh, you do?
I mean, yeah. I mean, it technically converts it to a limit conditional order. I mean, a stop loss and a take profit target is conditional because it has to hit that level that you picked first before it fills it, right? So that's a condition.
Conditional to that level, and then it goes market.
Correct. Hold on one second, guys. I actually have a call starting right now at 3. I'm getting a notification, but I apologize. I normally am not on 3 hours. It's been 3 hours, but yes, to answer your question, just be very careful. Don't use super high leverage and always have a stop loss. But as far as the platform goes, you're fine using your VPN. You can KYC even if you want, even with a VPN. If it makes you feel better, they'll just ask for your ID and your picture, your photo, and all that stuff. I'm KYC, but some people here don't want to be, and they would prefer to
not be.
They would prefer to not be. Yes, they would prefer to keep their anonymity.
Okay, cool. Thanks, man.
Yes, sir. All right, guys, but I'll keep you posted. I got to jump. I got a call. I got to get on right now. Someone's waiting for me, but I will keep you posted if I see any changes in the charts. It looks like hopefully we'll break through the $1.93 on XRP, and maybe Bitcoin will get through its little restriction here, this little resistance level, and we'll jump up here. But I'll let you know if I see any changes. Have a great rest of your day, and if you want, we are going to be on a live webinar tomorrow night. You guys are welcome to get on that. Just ask for the link in the main chat, or it's usually posted in the free Facebook group. But we'll see you over there.